Welcome everyone to CryptoCom. Can everyone see my screen?
Good morning, good afternoon, and good evening to some. We have some very familiar faces joining our Zoom chat here.
All right, so throughout the conference, you'll be able to communicate and even chat with some of the panelists. So inside of Zoom, as an attendee, you won't be able to, let's say, talk or speak to the attendees, but you are able to put a chat. So if you look in the bottom of your screen, you can see a chat icon and a Q&A icon. Both of those will be available throughout the day, and speakers, you'll see people asking questions occasionally. Feel free to drop in answers there. But you have some big speakers joining us today. Excited for the panel. We have two sessions today that we'll be covering. Session 1, Pacific time, session 2, Asia time, and we'll go over that shortly once we welcome everyone in, and people are still joining. Welcome, welcome.
We're excited as ever. Please use hashtag CryptoCom. Our team is on standby for all of our speakers and also panelists. We're going to be tweeting out some of the most memorable quotes and insights from all of these people. And so the goal really is to be engaged as possible. We consider all of you part of the community, and participation is much welcome.
So we have a few team members here that are on our staff. So if you have any questions about getting in, if you're a speaker trying to become, get nominated to speak, please feel free to message either myself, we have Christian, and we have Princess. If anybody on the Crowdcreate team, if you can put a hashtag in front of your name so people can know that you're a moderator. Welcome, Andrew. It's fun watching all these people jump in over time. And it's just a collection of all people around the world. David, good to see you here. James Walker. If everyone can chat right into the chat window where you're from. We'd love to welcome everyone from all parts of the world. From Hong Kong. My favorite place, Florida. Marin County, Italy. This really shows, the power of a community, and we just have all of these people joining in. We have some really big thought leaders we'll be sharing the stage with today. You'll be hearing from Anatoly, from the CEO of Solana, Mark Yusko, Dirk from Upland. We'll be hearing from Casper Labs. We have some pretty well thought through topics for everyone to learn, whether you're a beginner learning about crypto, learning about DeFi, NFTs, or you're an expert. You're going to hear the founders and the leaders behind this entire community share their insights on the stage. Welcome, John Davis.
New Zealand, Nigeria, Costa Rica, Poland, USA, New York, Thailand, Silicon Valley. This is incredible. Absolutely incredible.
Morocco. All right, so let's go ahead and kick things off. So welcome everyone to CryptoCom. You can see on our screen, these are some of the speakers that will be joining us. Feel free to, tweet, hashtag, call out any sound bites that you find from this event. And of course, we'd always like to hear feedback. So at the end of this event, we always want to be better. Feel free to send us a message into the window. For those just joining, there are two features that we'll be using from Zoom throughout this event. There's a chat feature and there's a Q&A feature. I can see that Mario just used the Q&A feature, Costa Rica. So throughout the day, if you have any questions for the speakers, drop it there. And speakers, likewise, if you can answer it through the Q&A or through the chat, it would be most appreciated. So going through today, so we're going to have two sessions, and I'll bring this back on. We do have a break in the afternoon if you're on Pacific time. But here you can see our agenda for today from 10 a.m. to 10:30. We're going to be kicking it off with showing you what's the next evolution for crypto communities. We have several massive panels. Excited to have everyone join us on the stage and some presentations from exciting projects. So definitely take a screenshot. And we have our second session, which starts at 6 p.m. to 9 p.m. Pacific time. And we'll be hearing things like the play to earn revolution, how institutional investors are looking at crypto.
We will be providing links to the speakers' bios and also to their projects. We ask that all of you support them. They've all graciously volunteered their time and also insights for this community-led events. This is a free virtual conference, and we throw these events to educate, to connect all of you from around the world with some of these top projects. So again, please support all the speakers. They're more than gracious. Ivan's gonna share some more insights on how we actually organize this conference, and they've all been very influential for putting this together.
All right, I'm seeing some Q&As come through. So if you're a project, if you're a speaker, feel free to answer, and our team will be answering it if, yes, absolutely. Feel free to stream it out. All right, so jumping in, again, the questions are coming in already. So if you're a speaker, or your project, or a moderator, feel free to answer those questions. So how is CryptoCom different from all the other conferences that we've hosted before? This is an exercise in a community-run event. So what does that mean? Prior to this event happening, we held 5 speaker roundtable sessions where everything from the other speakers, the topics, the panels, everything was voted on by the community at large. So what you're going to see on the stage today are, community nominated speakers and community voted questions. And this is how we're going to be curating better content. We truly believe in the wisdom of the crowds, which is why we're called Crowdcreate. And that's the importance of this conference. It's really the summation of the crypto community as a whole and putting it on a stage so that they can share their insights.
And our goal was really to be as valuable and as educational as possible. We asked not only previous attendees for some of the conferences we've run in the past, but we've also asked the speakers on what topics, what speakers and panelists they would like to hear from this event.
All right. So before we step forward, we want to step backwards and kind of see the origin of what the crypto community started as.
So did you know that Satoshi Nakamoto posted the first white paper and idea for Bitcoin in 2009 on this online community forum called the P2P Foundation? So this is actually a screenshot of how this happened. It was a community of people sharing insights for peer-to-peer alternatives on the web. At the time, this had 1,000 members. This is a picture of the first Ethereum meetup in Miami. A lot of very successful co-founders that you would come to recognize today. There's Vitalik Buterin, Gavin Wood, Charles Hoskinson, Joseph Lubin. So this is one of the first in-person meetups for Ethereum, and still to this day, they host a number of global events because of this strong community. Fast forward to 2021, how do we see communities being built today? As popularized by Bored Ape Yacht Club, CryptoPunks, Friends with Benefits, people are gathering by the millions on Discord, sharing insights about the project, sharing their excitement, creating content, and posting different memes to these online communities.
So behind every successful project is a community. So you can see here, whether it's a dev-focused community like what we have on Ethereum, to even the other side, which is, these communities that power even these meme coins. So from Dogecoins, you see Satoshi Bets, you see Reddit, you see Elon Musk, part of that ecosystem with his tweets. you can see that behind every successful project, there's a vibrant community.
And so we'd love to talk about the next evolution for crypto communities. All of you attending this Zoom webinar today are actually a part of our community. We have a group of passionate founders, investors, artists, sometimes celebrities, and even fans that are looking to support these projects. Because of the value of a community, or if you can go back Evan to that previous slide. So we've realized that there's immense value in communities. And so we've noticed today that there's quite a bit of projects that are being started and that are focusing on DAOs. And here's a good snapshot by Koopa Troopa talking about DAOs and also guilds. And so these communities can serve various functions, whether it's from the governance side, or to just share like interests and affinities between people. So over the years, Ivan and I have been building communities. Our earliest days started on Kickstarter and Indiegogo. We've raised tens of millions of dollars for some of these crowdfunding projects. What we've kind of realized is that never before could you participate in the value creation from the beginning stages of a community. Peloton is one of the most recent examples coming from Kickstarter, where they raised $307,000 for early supporters of their first bike that did not receive any equity, to now Peloton being a $26 billion market cap company. This has also happened with a number of other projects, such as Oculus. Oculus also started on Kickstarter, and they are now that was acquired by Facebook. And a lot of the early supporters and community members for these Kickstarter projects are asking, how do we get this share in the equity and value creation of these different companies? Ivan and I have also traveled the world to various conferences and events. CES was actually spun out of a media company. And it's a lot of money to attend these conferences. And likewise, what Ivan and I are going to, are excited to share about now is that we're going to be able to give this value creation to the community, and we encourage all of you to participate in it as well. And so the idea is that what if you could actually participate in the value creation of CES, which is now one of the largest trade show and conferences in the world. And so we're going to highlight some of the different communities that are very vibrant right now in the crypto space, and also what we've learned and some tips that you could apply today to accrue some of this value to yourself. Friends with benefits. This is a social token that allows you membership into a Discord community. Started just a year ago. And previously it was $75 to join. Now it is upwards of $10,000 to join. Just recently, I believe an investor round led by Andreessen Horowitz is valuing it north of $100 million. Just yesterday, it was announced that DYDX surpassed Coinbase. Now, there was an airdrop that went out to users of the platform. If you were based in the United States, you were not able to participate in this. And that airdrop is worth upwards of $100,000 to $150,000 now. So in terms of being a community member, we recommend that you be active and an engaged user of the product. And it's really, educating yourself as much as possible. So in the case of DYDX, if you can go back to that slide, the way that they leveraged influencers to create content to educate people about their crypto exchange is a good example of how you can leverage community and how you can also earn for educating and onboarding various users. So if you're looking to build a community, here are some of the basics in terms of getting people gathered and sharing some education, insights, and getting people excited about what you're doing. First and foremost, attract and recruit the builders from the start. We like to use Ethereum because it's one of the great examples and most vibrant communities that are out there. They are on the Ethereum Core Dev meeting 121. They actually post and share all their core dev meetings on their YouTube channel. They also have various IRL or in real life events such as ETH Denver that happens on a monthly basis. This is Ivan here in the bottom left, who was at the NFT mansion for the Sandbox Games this last weekend and creating content about this mansion where they had various NFTs like CryptoPunks on display. So if you're looking to build a community of your own, you definitely want to attract and recruit builders from the start that will help you in this process and stay consistent on your events and meetups. Another great example of a community is hosting AMAs and providing weekly updates that Celsius Network has done. We're big fans of Alex Mashinsky. He's participated in 3 of our events. We're brand ambassadors ourselves and also pre-sale early token investors in Celsius from back 2018. We recommend that you build in the open and you share your updates. More is better than less. If you don't build in the open, how will people really know how to support you and also share what you're doing? And in the case of community happening online around popular meme tokens in 2021, Elon Musk said it best, who controls the memes controls the universe. And meme tokens were very popular in 2021. Meme creator actually became a marketing job, and there was people being hired to do 100% dedicated memes. The idea behind memes is that you're capturing people's attention for your project. And that's also how you can build your community, by entertaining and engaging people. So all of these different events and activities are powered by the community. And one thing that we've learned to realize is that community building is very time intensive, and it's also costly to pay for the salaries for these various people and have them on staff. Everything from providing strategy and insights to product design, engineering development, referring new people to your project, growing social media management, tweeting, posting videos and interviews. These are all activities to build a community. And what we're doing today is actually hosting an event on community. And this is why we're more excited than ever to be able to put out something that the community can actually help build some of these projects and contribute in a way like never before.
So everyone here that's watching this conference, you'll be invited to participate in the value creation of this community. We're announcing that Crowdcreate, we're building a community DAO to power and become the engine to really push that next wave of crypto projects. We're calling it community. And it's going to be this tool that helps build, grow, and reward passionate projects. We're going to be that growth engine. It takes a lot of time to connect all of these moving parts. But with this, you'll be able to incentivize the entire value creation chain.
So how will it work? Well, we will partner with existing projects and build their communities in exchange for tokens. There's a lot of token created and powered projects that are out there that we've been approached and also are in discussions with right now to be able to provide our community building services. Number 2, we will continue building our own community. We actually have another conference lined up for November 30th called DevCom. This was called CryptoCom for the crypto community. That one will be focused on the developer community. all of these events, and we will also have a private community, which your social token will allow you access to be able to connect with different speakers, thought leaders, influencers, and content creators in our community. And third, we will grow our own treasury to invest in own early token allocations. So in terms of partnering with existing projects, you've seen a lot of the speakers today from some of the major blockchain protocols and also DAOs that are in existence. We are actually in conversation with them now to provide our own community building tools, services, network excitement to these existing projects in exchange for tokens that will be added to the CMTY or community treasury. We will also build our own community. If you visit the Crowdcreate website today, we've been working on a database and index of some of the top thought leaders who have been nominated by other speakers as being the top NFT gaming influencers, DeFi influencers, VC investment funds that have been providing value and strategic insights, and other thought leaders in the space. So we believe that community is our most valuable asset. We believe in strength by numbers and leveraging the power of the crowd. We will continue building these relationships with the top experts across these various industries. And something to know is that Crowdcreate doesn't just focus on crypto. Later down the line, we also plan on applying this model to various other industries. We've hosted over 100 events this year alone, and we really encourage all of you to participate in the value creation of this expert network. Over 300 plus speakers have come through our conferences, events, everything from real estate, crypto, blockchain, gaming, healthcare, renewable energy, all of these high growth and transformative technologies and businesses today. You will now be able to help us build this together. And so in terms of growing our own treasury to invest own early token allocations, we've been invited to a number of projects to be able to support them at the earliest rounds. We'll be using our community treasury to invest in these allocations and provide more value than just capital. Really, it's this excitement of community. Everything we shared, from content creation to referrals to hosting events. We are value-add investors that provide our own network, strategic insights, and also growth tools.
So why is the community so important now? And in the crypto space, it's always been important, but why is there a sudden shift to a higher focus? It's really about this event, this concept called a DAO. So a DAO is where traditional organizations are moving towards. So this is the next evolution of what communities will become. So in, let's say, a traditional organization, you have these top-down, you have teams, you have bylaws. In a DAO, the community becomes the crucial part of making these companies thrive. So you have community-based decision-making. Community members become the managers. Consensus is what drives governance. And you have things like community treasuries. You can see here, there's one underlying big component behind a DAO. It's the community. So this is why our community token the timing is perfect, because communities are becoming that much more important for businesses today. The social token industry is growing massively. You can see in the next 5 to 10 years, Raoul Pal says it's going to grow to $1 trillion industry in the next 5 to 10 years. So you can see here where we see the total addressable market is all of Web 3.0. So we're transitioning that from what Web 2.0 used to be, and now seeing what Web 3.0, it's unlocking communities to become more involved with these projects. So here, we're welcoming you to join the community, and well, you actually already have. So in this value creation event, everybody here attending, so we're going to take a snapshot throughout the sessions. So we have session 1, session 2, as well as the speakers. but we'll be airdropping these community tokens to everybody who is participating and joining in this conference. So stay tuned. We'll be taking snapshots throughout the day, but anybody who is a part of this conference will be participating. Community is a social token that connects you with the community of these crypto investors, influencers, creators, and more. And that's how we're going to reward participation and contributions, meaning you, everyone who's attending this conference. Here's a pie chart of what our token allocation is going to look like upon launch. But you can see here, 50% is actually, encouraging and empowering the community development. So when these projects that we partner with, a large portion of it will be actually empowering and creating those communities for them. So this is a big day. Starting now, you can actually apply for the whitelist. You can find it at joincmty.com. But everyone here attending, so if you know anybody that wants to attend or thinking about it, definitely tell them to join. We'll be taking a snapshot throughout the day. So again, anybody who's attending this conference will be eligible for this value creation event.
And we're also happy to take any questions now for our community, just in general. Again, you're all very valued here. And for some of our earliest people in terms of being a part of our community, sharing their wisdom, insights, and really supporting other projects. Again, this event is run because of the community, and now we want to really allow all of you to be able to participate in this value creation of our conferences, of our network, supporting the speakers, supporting upcoming projects that are very exciting. There's a lot of details that we did not share on this presentation just because of time. And so again, please visit the website. This is your call to action. Go ahead and apply for this whitelist. And Ivan, if you want to take a round of questions from some of the chat and just kind of hear feedback from the community.
Yeah, so what makes you different from other DAOs? So there are a lot of DAOs out there that is created for a specific purpose. So for example, there's one of the slides earlier, we showed that there's investment DAOs, there's collectible DAOs, there's media DAOs. Our specific DAO is focused on empowering communities. So that's the main core difference, is that the function and the goal of it is different. So for example, if I'm going to pull out random projects, but let's say Sandbox, works with this DAO, then they would, in turn, when they receive the community tokens, that token is going to be able to reward people creating content for them, people talking about them. It's basically like a community powering engine. We'll go into more specifics, when we release our white paper, but to find out the most information, most recent ones, sign up at joincmty.com.
So one of the questions is, how can current communities get involved? So specifically, Crowdcreate has been growing crypto communities since 2018. In 2018, we actually helped Asia's fastest token sale. It was 18 million in 2 hours. We grew that community from 0 to 10,000. We've been studying, learning, and constantly adapting to building crypto NFT communities for a very long time. And so in terms of how can communities get involved, we share different ways, social media posts, attending events, helping onboard new users, referring developers, investors, sharing with there's a lot of different activities that are in our framework and also in our toolkits that we apply to our clients. And now we're actually going to be turning this into a DAO that will be tokenized, that all of you can participate in this. But specifically, ours will be focused on building, growing, and scaling communities.
Yeah, if you think about it, all these influencers who are talking about projects, why couldn't everyone become an influencer in their own right? There are a lot of fans behind projects, and this is basically a tool, an experiment to empower everybody. And, it's a value creation event. So we believe that, come to the table of value and you should be rewarded And this is a mechanism for companies to do so.
And also when it comes to community and just supporting projects in general, we believe that contributing your time and contributing your money is ultimately what you place your priorities in life. And time, all of you have chosen today to be a part of our conference. And we appreciate all of you that have been able to contribute by sharing on social media, and also in terms of money, you know, that there's ways to support projects through capital. I just want to say thank you, everyone, for attending our conference, and please sign up on join.cmty.com, and you'll be one of the first. And as we mentioned early in the presentation, being early and being one of the first has its advantages, and see you there.
Keep those questions coming. All right, so moving into our first panel. DeFi and NFTs catalysts and risks in the bid for retail adoption. We have Simon joining us. Simon, how about you welcome some of our guests for our first panel? Simon, can you hear us? Andrew, can you hear us? You're good?
I can hear you. Yep.
Simon, I think your audio's off. At least he's enjoying his morning coffee. Well, Andrew, it's good to have you. Yep, they're all jumping in now.
Andrew.
So it's a really exciting topic. DeFi, I mean, we had DeFi summer, and now NFTs rapidly growing in adoption and excitement. This is a really relevant topic. Simon, you're getting a lot of call outs for your background. Let me know if you're able to. Oh, looks like we got multiple Simons. Oh, there he is.
There we go.
We have 3 Simons.
Fashionably late. No, I've been on for a bit. I guess I was in the wrong link. I was in the general link. But no, thank you. Looks like we have almost everybody on from our panel, right? I think we are. Well, unfortunately, so everyone knows, Timothea, CMO of Orion Protocol, she's actually out sick, so she won't be able to join us. Ian, looks like you have my name here. Ian Friend is on from Ferrum Network.
Hello.
I think he got renamed as me for some reason, and so did Adrian as well. So we have a lot of Simons here, which is quite funny. You can adjust your names into things, and I believe we're waiting on one more person. Let's give him another moment. Reggie, Jerath. Reggie is one of the co-founder, the founder of Gather.network and CEO. So I think we have, and there he is, right on cue. Excellent. So Reggie, if you can unmute and video yourself.
Sure. Hey guys.
Thank you. I think we have somebody else here, Christian Alma Jose. I'm not sure if they're part of our panel or not. If so, that's completely fine. Welcome everybody. Good to see you again. So we actually, a few of us were on the panel, in June now for DeFi Summit, and we hosted something similar but different in terms of speaking order. And then today, keeping conscious of the time we have, would love to really get into it. So our panel today is, DeFi and NFTs, catalysts and risks in the bid for retail adoption. So if we could quickly just kind of go around the table, maybe starting with you, Andrew. Pleasure to meet you. From a developer from AAVE, with quick introductions, and then we'll get right into it.
Yeah, so hi everyone, my name is Andrew. I'm a software developer at AAVE. I work in kind of a variety of different roles, from web development to smart contracts to debugging, and also like developer and community advocacy. So making sure that everyone understands how the protocol works, people are able to build on top of it. And I absolutely love what I do. I love empowering the AAVE community to build things on top of this awesome protocol. So.
Fantastic. Thanks, Andrew. Let's go next with Ian.
Hey, everybody. My name is Ian Friend. I'm the co-founder of Ferrum Network. We are a blockchain as a service project providing DeFi tools and other services, fundraising and marketing services to over 100 projects in the crypto space. Thank you for having me on. Really excited to be here.
Fantastic. Yeah, great having you. And then Reggie, we'll go with you next.
Sure. My name is Reggie. I am the founder and CEO of Gather.network. We are layer 1 and layer 2 blockchain, which provides an alternative form of monetization for websites and applications. And on the other end, we provide compute and storage to enterprises. Yeah, it's great to be here as well. Thanks.
Fantastic. And then my fellow Polish brethren, Mr. Crypto Birb, Adrian. Many know him already, so doesn't need introduction, but please introduce yourself and the Birb Nest.
Yeah, sure. Hi, everybody. My name is Adrian Zduńczyk. I come from Poland. People may know me better under the name CryptoBirb, which is something that I come as known on Twitter for. I'm a certified technical analyst. I'm about to finish on my way for the Charter Market Technician Association, which takes 3 degrees. Very good and respectable, just designation for the technical market technicians. I do invest and trade actively, within the Bitcoin and the legacy markets. I'm a chemical engineer for my main background, with the second master's in the management with a financial focus. I'm the founder of CEO ever since 2017 of the Birb Nest, the educational community for investors in actually trading and helping people learn how to trade safely, providing the education and raising the quality standards. I'm co-founder of YellowBlock as well, the marketing media agency. And I'm very happy to be here on today's panel with all these legends in the panel.
Yeah, thank you for joining us. And so no, it's been great. I'll do a very quick introduction. My name is Bogdanowicz. I'm the CEO and founder of Catalyst Global. I've been a longstanding growth and marketing agency in blockchain since 2017. I'm also currently the COO of Wi-Fi Finance, a decentralized finance project in the space that's growing rapidly, that has full suite of DeFi solutions, from staking and farming to a DEX and its own launch pad and everything else. And so pleasure to be here. Well, let's get right into it. We have a good amount to cover, short amount of time. We'll see how much we can tackle off. But starting off, we wanted to really talk about the evolution of DeFi and NFTs. And then, for a little bit background for everybody on the call, and then everyone, around the world here, DeFi has grown from just a few $1 million industry, right, to nearly $82 billion in total value locked. The last I checked on DeFiPulse.com. And then year over year, we've seen an extraordinary rise of over 330% in terms of TVL and DeFi. And lately, some could say, or all could say, really, it's been outshadowed by, the NFT market, right? So last month alone, in the OpenSea NFT marketplace, OpenSea recorded $3.4 billion in transactional value. And that's a 10x from what they saw in July. So you can see that market's ramping up. And then, put it in a different perspective, in 2020, the global NFT market did a little bit over 330 million in transactional value. And then this first 6 months of 2021, we've done NFT sales have surged over $2.5 billion in the first 6 months. So, and that's per Reuters news. So it's been a quite extraordinary rise of both. And they're both, as this panel says, competing for, kind of market traction, especially from the retail consumer side of things. So that being said, my first question opens up with, what would you say are some of the early, foundational catalysts for today's, growing DeFi industry, and how have we evolved from, from the kind of the back from the infancy of DeFi to now? What have been some of the, catalysts? So let me start with Adrian, kind of going backwards.
Yeah, sure. I'm very happy to take up. I think to start with, this is a very good opening question, and talking about the foundational catalysts, I do believe that whenever we talk about the decentralized finance as a whole, as an industry, the keyword, of course, is the decentralized, right? We believe, I think all of us kind of unite within the same stream, the same thought that the central system is broken. that the central system is corrupted to a major extent, that we cannot really rely anymore, like effectively, on what our governments, global governments, introduce to us, like on a daily basis for the efficiency of the banking system, for the overall like monetary policies, the never-ending inflation, never-ending monetary supply, and all of that. It all leads to very dangerous economic phenomena on the markets, on the financial markets as well, right? So it does impact not only the day-to-day living, but it also comes with an evident effect and impact on the financial market, the tradable markets, right? Which at the same time are somehow the source of major trends, right? Because based on the trends of the markets, many economists actually set up their monetary policies. So believing and knowing that the system is already broken to an extent that we are searching for different alternatives, we are searching to find out different solutions, we have come up a long way to define something that, as we know today, is a decentralized finance. And I'm personally here, both from the investors' point of view and at the same time enthusiast point of view. I'm here to tell that DeFi, is still in an early stage, right? There's been some time. There's been, ever since Ethereum conception, which eventually laid the ground, laid the foundation for the future upcoming structures for the DeFi. I think we're still early, and there are a lot of inefficiencies within the Ethereum blockchain itself, with coming for the transaction costs, of course, coming for the overall inefficiency whenever there is a big congestion, right? There are lots of concerns and actual problems that we have to solve as a part of a decentralized finance industry. But what I believe, aside from the overall disagreement, lack of encouragement perhaps from the people feeling like those regular people feeling that something is not right, that something is not really correct about what they tell us in TV, what they just want us to follow, about the regular central banking, that there's something odd, right? And that being the main, I think, psychological, social, and at the same time financial, evidence and stimuli altogether, causing entire DeFi to grow so rapidly. That is my take.
I appreciate that. And as you can tell, everybody, Adrian has very thoughtful, methodical podcasts on everything and all of this. And so we get into some very long Joe Rogan-esque conversations on this topic. Adrian, love to go back. Andrew, would love to go to you now at AAVE and get your thoughts as being that kind of the creme de la creme project in DeFi, I would say.
Yeah, I mean, I would just say that kind of the biggest thing that stands out to me is just re-enabling trust in finance, which is pretty much exactly what Adrian was emphasizing. It's just that you actually have the ability to verify publicly what you're interacting with, the ownership of funds on these networks. And I would say the other thing is just being able to earn yield on your assets without speculating on prices. This is kind of a market where you can actually make good money just by being ahead of the competition and using the financial tools and the technical tools at your disposal. And you don't have to have a background in trading if you don't want to, get involved in this space. The concept of just depositing something and then earning a yield on it just for facilitating some action, is very appealing to a lot of people. And, I think that's kind of what's taken this industry from 0 to 80 billion so quickly.
Yep, absolutely. Ian and Reggie, I'm going to switch gears for you guys and speak on the NFT side of things. So, many would say that the first real glimpse publicly of NFTs really started with CryptoKitties, and that's debatable, but I think a lot of people would agree with that. But that being said, what would you say are some of the other projects that have really taken a step further, since then, since CryptoKitties has come out, and what has caused the NFT space to really explode over the last, let's say, 9 months? Ian, let's start with you.
Sure. So I think there's probably a number of catalysts, and we can debate the cause. I'm not sure you can say there's any single cause. I think from sort of a macro standpoint, actually the global pandemic, was a major factor in the rise of the popularity of NFTs. And that's because the governments, many Western governments, were essentially printing money, handing it out. People had more money to speculate on new technologies. They also have more time on their hands, stuck at home in front of a computer. And it was the NFTs is sort of a perfect opportunity for those in millennial generation, Gen X, who are already very plugged into technology, in front of screens all day. Now all of a sudden you can monetize a JPEG, right? Before that was not possible. And so that's sort of those macro elements I think played a big role. Also the fact that you talk about projects, that I think it's the big marketplaces that probably changed the game a little bit. I was in crypto in 2017. I remember when CryptoKitties clogged the Ethereum blockchain. It was huge news. I don't remember there being real marketplaces though. I don't remember there was I don't remember that it being terribly easy to actually trade these assets. Now there's a proliferation of very user-friendly marketplaces. OpenSea, obviously the biggest one. And there's many other really high quality, easy to use. And, you don't need any advanced knowledge of much of anything other than know how to use a smartphone, and you can access the NFT market now. So I think those are probably the big reasons. But there's probably others that I'm not even aware of.
Yeah, well, Reggie, I'm sure he has some ideas as well, and working with Gather.network and how you overlap into some of these websites and also marketplaces, could be interesting from your perspective.
Sure. I mean, from a Catalyst perspective, I kind of, would resound what Ian is saying, or what Catalysts are, that these marketplaces that have come up definitely have had an impact. From what I've seen from Gather's perspective specifically, I'm going to talk from an artist perspective. We work with a lot of publishers, etc., people who just create content. So I just guess I wouldn't want to use the word mass adoption, but just the snowball effect that's been happening. What caused it? I don't know exactly. Access, easier user interfaces, or easier UI for people, and then just going forward from there. And you have all these artists who are using traditional, let's say, auction houses now moving into, as you said, OpenSea or Rarible. I think has had a major impact in the industry. And one aspect which most people don't really touch upon is on how NFTs can be used as an access token rather than just art or ether rocks or whatever it may be. I think that's still really underexposed, and that will come up in a big way as well.
100%. I'm glad you touched on that, because I think that's a big area. I mean, I think Mark Cuban and others are going to be doing interesting things with how NFTs tie into the in-stadium experience, right? And a lot of big football players, soccer players in Europe and across the world are getting into it as well. And I think there's a huge market in terms of US college sports and NFTs and what that looks like. So 100%. The next really topic I want to get into, very interesting. It's focusing, drilling down into NFTs and thinking about them. Is it really a regulatory minefield or opportunity goldmine, or both? So, if I was doing some research before a panel, looking at different things, and there's not a lot of information out there in terms of like how, let's say, being based in the US, how at least the US government's going to be handling NFTs, and what are some legal issues around NFTs. Everything from, are they treated as a commodity or security or something else? What about the transfer of intellectual property rights? Does that really take place? And is there kind of, lawsuits that can take place around, intellectual property rights when it's tied to NFTs? And also the rise, do NFTs really give a rise to unique cybersecurity concerns, right? You're accessing these, OpenSea and others with private keys, and let's say, some hacker, someone gets access to your private key, they can start selling off all your NFTs or do a number of things. So I think we're going to be seeing a lot of different things. I think it's very unique. So here, I'm going to start with, let's say I'll start with Ian now. What are, in your view, some of the, legal debates about NFTs that could play out worldwide, and could regulations really impede on the blossoming opportunities that we're seeing right now in the industry?
Yeah, I think regulations are always a concern. I mean, the regulators are still probably trying to figure out DeFi, if that. I mean, they just started an investigation of Uniswap, and so they're not. I don't think they've moved on to NFTs yet. They're still trying to get a handle of the last trend, but I imagine they'll eventually turn to NFTs. The market's so big, people are making so much money. Obviously folks need to pay their taxes. If you sell something, capital gain, you're supposed to report that. Yeah, that's low hanging fruit. from a security standpoint, I mean, if you use NFTs to raise funds for your venture, in all likelihood, the SEC would view that as security. You should register it as such. And there's penalties for not doing that. So that'll probably happen. The more interesting question, I think, is around the intellectual property, though, because is this all? So imagine I find image on the internet that I like, and I upload it to OpenSea. I'm making an NFT, upload it to OpenSea, and I sell it for money, and I make money. That probably is intellectual property theft. It's not. I don't view it as being altogether too different from the days of Napster, right, where people were taking music, illegally downloading music, or they're taking music and they're uploading Napster or whatever other services, and they're making money off of that. That's intellectual property theft, and Napster went down for it. And individuals actually were sued. I don't know if you guys are old enough to remember this, but Metallica and some other big bands were going after users of Napster, like personally suing them for tons of money. And to me, there's not a lot of difference between what's happening in the NFT space. There's people infringing on artists' intellectual property, and they're opening themselves up to legal liability because of that. I used to be a lawyer, by the way, so I think about these things a little bit. So that's something to think about. I mean, if you're going and ripping off artists and you're selling someone else's art on OpenSea and making money off of it, that's stealing their intellectual property, and you could get in trouble. So I think we probably as an industry need to get a handle on that a little bit. The gatekeepers probably need to be concerned about that too, because I imagine they could be opening themselves up to liability as well. But they'll figure it out. There might be lawsuits, whatever, that'll resolve itself. But I'm not losing a ton of sleep over it. I'm a little more worried about what's happening with the SEC and DeFi than I am about NFTs. But there are legal issues for sure to think about when it comes to that.
And my subconscious remembered that you used to be a lawyer. So I guess I went to you just really subconsciously first. So appreciate that. Mr. Crypto Birb, love to get into into your thoughts on this too. So kind of just to repeat the question for another moment, what are some of the legal debates about NFTs that you see are playing out or could play out on a global scale?
Yeah, I think it was well summarized to start with, whether or not this is a regulatory minefield more than an opportunity gold mine. And the truth is, it's kind of like dual nature. It's both of it at the same time. And it depends on the context, and at the same time, it's very local. Like whenever there is a regulatory thing, the regulators press over the regulations to like impose certain bills. It is a global thing, but at the same time, it happens like step by step, brick by brick. Like it happens country after country, right? So just me speaking, from the perspective of a Polish person living in Poland. We are right now as on the major say level like of society social awareness, we are probably about 20 years behind, right? Like the global trends right now. This is very sad, but this is how it is. The government in Poland would not really, first of all, care too much to give to even time to dispute whether or not this is something legal or something illegal, or whether this is good or bad, because they are too busy fixing the other stuff, right? So we are far, just on the versus the global, let's say, momentum and trends, we are far behind, right? So that's why I'm saying it's a global thing. And for one countries, when there is no much regulatory pressures, of course, there are like tax havens and everything. I'm sure this is going to be more of an opportunity gold mine, right? But for the countries like Poland, whenever you try to impose or try to build something, that is NFT related, you're going to meet not tens, but hundreds and thousands of problems and obstacles coming from the regulatory point of view, because simply there is not, like, the system is outdated, right? You would not have the legals to actually back up anything, with regards to it is, the intellectual property or not. They just simply don't care about that, and it's very sad.
Yeah, no, that makes a lot of sense. Yeah, it's going to be very localized or nation state based. Andrew, going to you, so one thing that we brought up, before getting on the panel that you brought up really was that, like in the US and China, major justification for regulating access to crypto has been risk. And you said that, you think that DeFi NFTs share a lot of the same challenges of maturing and shifting the public narrative on this topic. So a question to you is, How do you think the DeFi and NFT protocols and projects will evolve to address concerns about risk and consumer protection?
Yeah, so I mean, I guess in that regard, kind of the thing that makes these things novel is that they're verifiable and on the blockchain. And so I think a lot of this is about educating both the public and regulators about exactly what this technology is and what it's capable of, while also kind of playing devil's advocate and saying, giving examples about what is not decentralized, what is not DeFi, because it's very possible to use this technology to just build these systems that are no different than essentially gambling. And so, it's on informing the users about, educating themselves as to what they're putting their money into, as to what, the different implications of the technology they're using. Each of the networks that these people interact with, each of the wallets they interact with, there's security concerns at every point of the way. And so I think it's really on the protocols to inform their users exactly what they're getting into, and also educating them that in a lot of ways, these systems are safer than giving your money, to a centralized institution, because you can verify exactly where your funds are going. And so, I think that's the future, is just education of these platforms to their users and also to regulators.
Yeah, no, absolutely. And Reggie, finishing off this topic with you, where do you see the NFT space flourishing that's really not currently being discussed on a public scale?
I think to see it flourish, we're talking about regulations and regulators, gatekeepers, etc. It's going, where the industry will flourish will be in areas, states, nation states, whatever you want to refer to them, where they're being friendly or they're forward thinking. I'm just going to cite an example here. For example, when you buy property in Dubai, right, it's actually registered publicly on the blockchain. I don't know if there are too many countries doing that, but I know they're relatively crypto friendly here. States like Dubai, states, countries like UAE, etc., that are very forward thinking, that are embracing the technology and looking to how they can enable a larger community to invest, participate in a safe manner, is where we will see NFTs or DeFi and whatever the next trend may be flourish, right? Because it is the gatekeepers, it is the regulators, it is the people that are in power, that do control the laws. We'll see such trends, such industries move forward.
Yeah, no, you make a great point there. Here, we're going to take one quick question actually from the crowd here, Ian, before you, giving your legal background as well. But I understand you're not a current lawyer. What would you say is the biggest concern with DeFi and the SEC?
Well, I know that, or we all know that the SEC is investigating Uniswap right now. We don't really know, at least I haven't looked enough into it to say exactly what they're investigating in terms of what laws they feel they may have broken. I tend to think it has to do something with KYC. KYC is something that governments around the world take very seriously, ostensibly because they are concerned about money laundering and terror and getting in the hands of terrorists and so on and so forth. I tend to think that it more has to do with being able to track people to make sure they pay their taxes. But in any event, it is somewhat possible, I would say, that the SEC comes out with some guidance or an enforcement action against Uniswap eventually for not having imposed any KYC on any users. And we can talk about whether KYC is even possible in a decentralized protocol.
And Uniswap Labs based in San Francisco, right behind me here, I believe.
Yeah, and their founder was, I believe he built everything when he was living in New York and Brooklyn. So it's not as if they don't have jurisdiction. Uniswap has users in the United States. They have jurisdiction over Uniswap, at least with respect to US users. And they could easily say, look, you have to start doing KYC or we'll shut you down or something. I don't know exactly what they'll end up doing. Hopefully nothing drastic. Maybe there's some middle ground there. And the good news is the powerful players in this business, Coinbase, the Winklevoss guys, they all have lobbyists. They have lobbyists, high paid lobbyists in Washington. They have like groups in Washington they've made to help influence the laws around crypto. So hopefully we find some sort of middle ground. I think there's a concern among many people in the United States Congress that if you go too heavy on regulation, it will quash innovation. all the innovation will move offshore to more favorable places like Dubai, what have you. We'll all the Americans will leave and move away, and then all.
But is that really a concern? Yeah. How big of a concern?
I don't think they're not gonna crush the industry.
Right.
But they already stopped Coinbase from offering a lending product.
Not yet, at least. Yeah.
I don't know. It's hard to say. It's kind of like, it feels like every day you hear different conflicting things. So we'll have to just wait and see. I remain hopeful and confident overall, but you never really know with these regulators.
Yep, absolutely. And that's really, given our time, I just want to get 30 more seconds if Jeff and Ivan don't mind. So like quick 10-second bit from everyone but Ian, because he just spoke. So Andrew, a quick 10 seconds on who do you think will be leading the way for consumer adoption in the next 12 months, DeFi or NFTs?
I guess I would say a combination of both. You're going to see a lot of crossover between NFTs and DeFi. I know it's kind of a cop-out answer, but I guess I will also just
from AAVE, you have to say that. Yeah.
The kind of the biggest area is going to be layer 2 growth. I think that a lot of people have not realized that, you know, the composability that is possible with these networks and applications is really just getting started on ETH mainnet as to what you can do. And the possibilities when you lower the transaction cost to 0 are just insane. So we're going to see aggregation, we're going to see abstraction, we're going to see all kinds of different things for DeFi and NFTs.
CryptoBirb, you get literally 5 seconds. What do you think? DeFi versus NFTs?
In my opinion, DeFi is it's well more positioned so far, and it's kind of like way more mature.
Okay. Awesome. Well, thank you guys so much. Appreciate going over the minute too. It's been a great panel. I'll kick things back over to Ivan and Jeff. You know, they'll start the next panel. So thank you guys again. We're all reachable, you know, by email and by LinkedIn, Telegram, if you know us there as well. So we'll have those details passed out.
Thank you everyone for your thoughts and insights. All right. So you have a lot of questions coming in through the chat. So definitely stick around, answer them. There's even some pointed specifically for some of the speakers. Thank you, Simon, for hosting that one. Let's welcome Paul Adrien from Whaleroom to the stage. He'll be our first presentation. So this is a really interesting project. Paul, welcome.
Hey guys.
Hey, welcome.
Can you guys hear me well?
Yes. If you
Excellent.
can share your screen and let's kick it off. You have 10 minutes.
All right, let's do it.
Excited to learn about Whaleroom, and I'll give you a warning at the 1 minute mark.
Okay, perfect. Well, thank you, Ivan, for the introduction. Super happy to be here. Earlier, Ivan and Jeffrey, they discussed the importance of communities in the crypto world, which is great since I'm going to talk about token-based communities. So quick overview of the agenda. I will look at the what, why, and how of a token-based community. I will first define the concept. Then we look at the benefits of token-based communities. And finally, we look at the current platforms that exist for organizations to interact with their holders. So brief introduction, my name is Paul Adrien. I'm the co-founder at Whaleroom. I am French, as you can probably tell by my accent, and I'm currently based in London, where it just stopped raining miraculously. So let's start at the really beginning. What is a community? Let's try to define it. So if we take the formal definition, it's people that share common interest living in a particular area. And I find it quite interesting because you can tell it's an old definition since nowadays, you don't need to be in the same area to share the same interest. We all interconnected through the internet. And so you can relate with people no matter where you are, no matter what your interests are. A great example is sports, for example. Many people share the same interest around the same sports or sports teams like the Juventus right here. It could be around a type of music or a group of music or a band. It could be a crowd gathering to watch an artist perform. But in 2021, communities are so much more than just that. We also have a lot of creators that gather communities around themselves. For example, YouTubers that can have millions or even hundreds of millions of subscribers. And I think some YouTube videos nowadays have over 1 billion views. So a lot of people sharing the same interests. Streamers on Twitch that can have also millions of people watching them live while they stream their video games. Last but not least, TikTokers that have become instrumentals for brands to promote their product through marketing campaigns. And talking about brands, communities in brands are also essential nowadays. We can think, for example, of Supreme. When we see someone wearing a Supreme t-shirt, they embody the value of the brand, the exclusivity, they are part of that community. Another clothing brand, Gymshark, a very, very strong community. When people wear the brand, they embody the culture, the working out very hard. Another example could be Starbucks Coffee, not a clothing brand at all, but a global brand. And no matter where you are, if you have a Starbucks coffee cup, you also embody the value of the brand. So now that we looked at what are communities, let's try to understand what is a token-based community. What is this new concept? What does it mean? And essentially what you need is a social token. It's a form of cryptocurrency. And for example, if we take the football club of Paris Saint-Germain, the PSG, they actually have their own cryptocurrency called the PSG token that the fan can buy and sell. You can also imagine a world where the brand Supreme or Gymshark have their own cryptocurrency. But let's dive into a real world example. Here's Keisuke Honda. He's a Japanese football player, and he was one of the first to launch his own cryptocurrency. And if you hold his cryptocurrency, it gets you the right to access his Discord channel, where you can discuss directly with him and you can access to exclusive content. And I think Ivan and Jeffrey, you mentioned something similar about a project that if you hold enough of the token, you can access the Discord group. So this is something that we can see with Keisuke Honda as well. But so what are the benefits of having a token-based community? Why is a football player having his own social token? And what would brand do the same thing? Let's look at it from the organization perspective. And when I say organization, I mean a brand, an influencer, or a creator. Well, first and foremost, it's a new way of monetizing. People can buy and sell social token, and there are ways for organizations to benefit from it. But more than that, it's also a way to interact with your core user base, the most loyal fan, the most loyal customers, and to collect better data on their behavior. Overall, to have a more personalized approach to do market research. From the community perspective, and when I say community, I mean the fan, the user of the customers, it's a new form of ownership and engagement, as we see with the example of the Japanese football player. It's a way to directly engage with a celebrity or a brand. It's also a way to have specific contest and competition only for the holders. And it's also a way to reward positive group involvement. So if we keep the example of Paris Saint-Germain and the PSG token, you can imagine that the most loyal fan, the most active on social media, or the one that goes to every game could get rewarded by their PSG token. Overall, it's a way to build a stronger sense of trust with customer, users, and fans. So let's look at the how. How does an organization interact with a token-based community? And if we take a step back here, we can see the most popular platform where crypto projects are being discussed. Interestingly enough, some of them were created before Bitcoin was even launched in 2009. And those platforms are amazing, but they were not built for token holders. They were not built for that purpose. And in more recent years, we've seen platforms that were created specifically to fit the needs of crypto holders. And we're going to look at them one by one. First, we have Socios. So Socios is focused on sports team, football teams. That's where the PSG token is actually traded, but also NFL, MMA with the UFC. They have over 45 partnerships with global sports team. And the fan, if they hold the token, they can decide, for example, on the next color of the jersey of a team. They can decide on the next songs of the entrance of their team, and so on. So really a way for fans to be more active with their team. Rally, they're focused on creators, so musicians or influencers, YouTubers. They make it very easy for creators to have their social token. No cryptocurrency knowledge is required, no technical knowledge is required. To this day, they've raised almost $60 million US, and they have over 100 creator coins. And then we have Blockster. So Blockster is sort of a one-stop shop for all the crypto matters. They have 400,000 people on the waiting list. They're launching their platform in Q4 of this year. And basically, they brand themselves as a place where teams can also interact with their communities. And they want to be the next social media, basically, for cryptocurrencies and social token. So it's interesting to see that there were not really any platform for token holders until 2018. And since then, there is a lot popping up, encountering a lot of success. And last but not least, Whaleroom. So we are a very young startup, and our goal is to make it frictionless for social token creators. And when I say creators here, I mean brands, influencers, but also crypto projects. We want to make it frictionless for them to create their own branded space to interact with their loyal holders. So we are blockchain agnostic. We want to integrate with as many blockchain as possible. How do we do so? Well, we have two offers that will be available soon, either on a self-serve basis. So a creator can come to Whaleroom and they can create their own social branded space to interact with the holders. Or for larger customers, we have also a white label managed system for them to have their own space optimized for crypto users. It's worth noting that we do not require any information from our users. It's just a need to connect your wallet. We are super excited about this project, and we use cryptography to ensure that the users in your social room are actual holders. So for example, if CryptoCom had a room on Whaleroom and they wanted the minimum of the room to be one CryptoCom token, well, users would securely verify through Whaleroom that they hold at least one CryptoCom in order to access the platform. Let me show you a quick demo. So this is our beta version. Here, this is a room that anyone can join. No token is required to join the Whaleroom community, and you can see what we're about and interact with the users. On the left here, we have projects currently listed that do have minimum, and you are required to hold the crypto of that project to partake in the discussion. And then you can share, if you're a team, different polls, audio posts, and if you're a user, you can ask any question or interact with other members. So if you are, sorry, Ivana, I guess this is my 1 minute mark, which is perfect. So if you are a team, if you want to tokenize a community, please come see us. We'll be happy to show you how you can create your own space on Whaleroom. And if you already have a tokenized community, also come talk to us. We'll show you how you can enjoy and make the most of your tokenized community. Thank you so much.
Thank you, Paul. Thank you for that presentation. Really interesting application of a community, to a community platform where they can communicate. So welcome, but thank you, Paul. Thank you for your time. You're getting a lot of questions in Zoom chat. I sent you one of them, but definitely you're getting a lot of fans here. All right, so moving to our next panel, blockchain scaling solutions. We have some very esteemed speakers joining us. Let's see if we could bring them to the stage. We have Anatoly, the CEO of Solana, Renal from Casper Labs, and we have Mihailo, the co-founder of Polygon. So welcome.
Hey guys.
Hello. It is a privilege and honor to have you here. Thank you for taking the time. I know Polygon should be joining in shortly. We're sending a message out, but yeah, I wanted to kind of kick this off and say thank you so much. You guys, the three of you are truly, the vision of where blockchain is going. And I think the community really respects all of you for what you're doing. So that's the purpose of this panel. We wanted to bring, the biggest thought leaders, the experts, the people moving and shaking the industry to the front of the room to share some of those insights, specifically around blockchain scaling. We want to talk about, I want to focus the first half on kind of the big picture on, what is the solutions that you can do collaboratively. And then the second half is maybe a light dive into on the technical side. But welcome.
Absolutely. Should we give the Polygon guys a minute, or would you like us to get started?
I think we can get started. They should join, but definitely, yeah. Let's talk about, if you can just do a quick intro, and let's talk about how you see blockchain scaling happening here.
I can start.
Yep.
Yeah, we have a pretty kind of straightforward approach, which is leveraging hardware, Moore's law. The long-term vision for us is kind of boring. Imagine a Cisco box that's a switch, and then there is a Solana box that also looks just like that switch with a bunch of hardware optimized for low latency packets, GPUs, or whatever kind of ASICs to handle at 25519 signatures, and just churn data as fast as it can. I think for a particular kind of chain where you're focusing on latency and trying to reduce how information propagates around the world to be as close to the speed of light, this seems like the obvious path. But decentralization is a many faceted thing. It's a Pareto efficient problem, so there's a lot of different ways to slice it.
Yeah, my perspective is I don't disagree with any of that. I would just add on top of that, like, scaling means a different thing depending on what you're trying to do, right? If you're trying to build like a decentralized exchange or liquidity pool, the most important KPI to you is probably things like latency and throughput. That's really, really important. However, imagine you're trying to create a market for reinsurance products or mortgages. These are slower, larger, bigger transactions, and the KPI there is probably things like regulatory risk, compliance with local and international law, as well as recourse in case something goes wrong. And therefore, I think there's this whole notion that there will be a one size fits all in the space, and I actually don't think so. Similar to if you look at database technology or ERP technology, different ones have been applied differently depending on what the end use case is. Our approach is much more on the enterprise side, where think about the couple of use cases I talked about, like large supply chains that have really expensive objects, and their KPI really is security, compliance, regulatory, which also sometimes requires a balance of what's kept in private data silos and what is publicly put onto the chain. And now some people might find that weird, but really the answer is the more that's public and the more that's transparent, the better for all of us. Because if you actually think about enterprise adoption of blockchain technology, it's close to nil, really, in any meaningful sense. And so, yeah, I agree with the comments. It's just scalability also comes down to things like security as well, documentation. People find it hard to get on blockchains these days. But I'm actually excited that people are coming at this from many directions. I think it's going to be an exciting decade for the industry.
Anatoly, what do you think about that? Different applications have different use cases.
Do you want us to get into a fight?
No, I truly we want to take it from a collaborative point of view, because I believe that the brains here, the two of you and Polygon, once they join, the community at large is they nominated you three because they see there's a solution to blockchain scaling here, and it's not necessarily one's better than the other, but how do we approach this as an ecosystem? And I guess the winner at the end of the day is the consumers or the businesses that are going to be using your chains, right?
Yeah, I think there's you can create live the Cosmos future, right? Is where everyone has their own blockchain. I think that one is very much something that enterprises kind of understand, like big companies. They're like, oh, okay, I can run my own chain and I get the blockchain. But I feel like that's kind of like in the 90s, big companies would say, Ford is now on the internet, or like whatever the biggest retailer was, Sears is now on the internet. They didn't get the internet. That's why they didn't build Amazon. My feeling is that the open networks where there's open data, transparency, smart contracts, free flow of information, that's going to be kind of that next internet. And how it plays out, I think, is, we're obviously making a bet that it's going to be one giant fast state machine as like the center of gravity. And I have a lot of arguments I can say why that's true, but I'm not stupid. I think the world is complicated. And I can see a lot of possibilities for a lot of different things to play out, and also have the, it can come out in different ways. There's not necessarily a belief that any one of these systems is going to have 80% of all activity, because databases don't really work that way either. Or with chips, you get x86 as a dominant thing, and that was like how the industry converged. But we're not at that like layer of the cost of deploying these systems is cheap, the permutations are large. There's not a specific constraint like on silicon manufacturing or something like that to force it to a point. So it's going to be competitive and interesting, and it's ultimately going to depend on the users and the use cases. Where do they actually see benefit? What activity are they doing that benefits them? Doesn't matter if they're all in the same state machine. Doesn't matter if they have to switch rollups or shards or something, right? Like, we just don't know, because we don't know what those applications are yet.
Yeah, actually, I don't think this is going to be a fight. I don't actually disagree with that. I think the view of like a bunch of private blockchains linked together, I actually don't think that's the right direction. I think Anatoly gave like good examples of like Sears and Macy's, etc., thinking they were on the internet, but they actually weren't. But Amazon was. Is actually quite relevant. I think what I meant to say was more along like how things are deployed for regulatory and compliance reasons. And so let me actually make that clear, right? Let me give a very specific example, right? So take something like intellectual property. Patents are hugely valuable things that are owned by companies, and there's 200 patent offices, and there's tens of thousands of companies. It would be great if there's a patent marketplace on a public chain, and there's one that's coming to Casper or by IPV, and it's a public, completely public, open, transparent, and you can see things like who owns which patent, who are the licensees, who are the licensors, and when does expiry happen. Now there's a whole other layer of regulatory stuff, which is what did people pay for the license? Were there any bells and whistles associated with that license that cannot be shared publicly, just because of the way NDAs work and the way laws work? So you get all the benefits of a public marketplace, but you also ensure that local laws aren't being violated. And the way you do this is you agree on what's going to be shared publicly, and then you agree what doesn't need to be. And maybe the proof of that is only shared between the two actors who actually exchange that information. And you still have the hash on the blockchain, but you don't actually enable lookup of that information. And now I think over time, especially similar to what happened on the internet, transparency just grows and grows. But if you don't get people to dip their toe in the water and actually, go after, the initial look at what this patent database looked like was 100% private, and the lookup being public is a great step ahead for the end consumer and for B2B customers. It's not all the way there yet, but I do think that there's going to be some level of hybridization as people come along. But I do agree with the point that, if they're just maintaining private blockchains of their own, you're not really getting the true benefit of the underlying technology. No disagreement there.
I also think that like we're in a weird stage of the industry where I feel like a lot of Web2 companies are going to try shoving blockchain somewhere in there. And it's not going to go well because they don't get the openness, grassroots kind of growth that you see in community formation and like native crypto. And we'll see how that plays out. But even for things that seem obvious, like games and things like that, right? There's a lot of opportunity in gaming, and big studios to come in and make a lot of, it feels like this is a ripe time for a big studio to take a big swing on gaming. But I think it's going to be really, really hard for them to give up control. And that's going to really allow for smaller, more entrepreneurial folks that understand crypto and can build good games to actually be that next, Blizzard or whatever you want to imagine. So right now I feel like is kind of that time where you have a lot of technology, a lot of opportunity for growth, a lot of opportunity to take market share away from Web2 giants with these new tools that they don't understand. And even if they do understand, their management is not set up to take that risk.
We have a gaming panel coming up soon, so you might you might hear some nuggets from them, like Axie and Star Atlas.
Yeah. So those are native born, right? Those were not big studios or anything like that. Like Jiho and the founders of Axie, they've built through the bear market. Like they were grinding, like for years, and they understand how crypto works at their core.
Yeah, Anatoly and Renal, thank you. And it's very inspiring for both of you to be CEOs of these big vision blockchain projects. Kind of curious, we talked to Jiho, the Axie Infinity, even the Yield Guild Games team. But what is it like being the CEO and driving that vision of these blockchain scaling solutions? And maybe you can provide some insights on just being that visionary leader.
It's weird because the chain or the code base, it's very much like Linux open source development. We have a company simply because in the US people need to get healthcare from somewhere, and having a company is the place to do it. So, but other than that, like we're trying to do this grassroots open development and get as many other people. We're trying to give it all away, right, as fast as we can. That's the hard part. Is like which is quite a different thing than traditional, US companies that are trying to build revenues. And even open source first corporations, like Mango or whatever, had that like software as a service model where you're giving it away for free, but then they want something back. So this is, to me, like really true to the core of what those folks that were building Linux, in those early days. We just want to build a really cool kernel. We just want to build something that's interesting and fast and cool. So that part to me is extremely is exciting. I was building Linux from scratch in the 90s as a teenager. So
wow. That's great. Renal, how about yourself?
Look, it's extremely exciting. Just to give some context, while I am a computer scientist by training, I kind of while I've been investing, in the blockchain space since about 2011, 2012. So I've got to see it from birth. I was more a passive observer, at a full-time job at Bain Capital and then at a hedge fund. And I felt really passive, and I'm glad I made the leap in 2017 to I saw, very particular reasons why adoption wasn't happening. And I saw it from the investor side, right? As an investor in public equities and companies, I knew why they weren't doing it. I was like, okay, there are these compliance and risk issues that exist, and you're not going to get a big public company to use it unless XYZ is done. And it's been really, really inspiring. I mean, you don't get a lot of sleep. It's not sustainable unless you're really, really passionate and you care about it. It's absolutely not sustainable. It's not, and it's not glamorous. If people think it's glamorous, it's not. I mean, as CEO, your job is consensus builder. It is not debark orders. It is consensus builder. You get you have a vision, of course, but you have to build consensus around a vision. And so, I'd say passion is really important. That being said, look, it's super exciting, right? If you're able to add value to communities and to businesses going forward, nothing's more exciting than that. So, really, really happy to do it, and really glad to do it. It's super exciting. It's really fun, but yeah, it's work.
Thank you for sharing your stories. Truly, truly inspirational. I think in closing, we're big fans of Solana and Casper Labs, and not just Crowdcreate, but the whole community here behind, who nominated you to be a speaker. Is there anything that we, the community, can help to support you?
There's a Solana hackathon going on. Even if you don't code, just jump in and take a look at what people are building and give them some feedback. I mean, those early users are your best Q&A team.
Yeah, can you share the link in the chat, and I think everyone can sign up.
Yeah, solana.com/ignition, I think is the.
And how about you, Mernal?
Also a hackathon going on, but done by a third party. Gitcoin is doing our hackathon. It's being done by the nonprofit out of Switzerland. So very similar. I actually think, you know, I'd almost suggest the one thing that us and Solana have very much in common is we're both huge Rust fans. You know, we strongly believe. Yeah, we think like just the security and the fact that it's strongly typed just lends a lot more safety to the underlying technology. I do think regardless of like what chain you like, what chain you build on, that's likely to become like one of the languages, or that kind of construct is likely the future of where blockchain goes. So I think, you know, adopting Rust or Rust-like languages is very helpful to anyone who wants to become a developer in the space. I think the more, call it old OOP style, C++ style languages that we saw are not going to be the future of the industry.
Thank you. Thank you to you both. Some people are asking questions in the Q&A. Definitely take the time to answer them. And truly, thank you for sharing the time with the whole community. And we'll share those links to those hackathons so that, you know, people can join in.
Thank you.
Awesome.
Thanks,
thank you
guys.
so much. Thank you for joining. Thank you for your time. All right. Moving to the next. That was an amazing panel. Sharing their passions and their insights is humbling.
Legends in blockchain. I'm happy that the community was I think it was a big one of the big draws, just to hear what's going to happen when you put them together. I'm glad they're so collaborative and great leaders to
almost had a fight. Just kidding. All right, welcome Sebastian, Jeremiah, Christina. Got an exciting panel here.
Hi, Evan. Hi, everyone.
Hey, everybody.
Hello, everyone.
Oh, looks like everybody's here. All right. So, Christina, I'll let you take over from here.
Thank you very much, Evan. Thank you, Ivan, Jeffrey, and all the team. Honestly, you're organizing an incredible event. And so I'm happy to be here with my wonderful co-panelists who are pretty aware in the space. And we will be talking today about NFT hype. So I'm happy to greet here Alexei, co-founder of Rewatch, Sebastian, co-founder of The Sandbox, Jeremiah Ouyang, founding partner of Kalida Insights. Hi guys, how are you doing today?
Great. Hey, great.
Fantastic.
Okay, and I'm Christine Lucrezia-Cornera, editor-in-chief at Cointelegraph, and well, we've been the advocates and also the readers of the NFT hype happening in the last year. Just to give you a number, so like in June 2020, the overall keyword volume search for NFT keyword was 12,000, and now it's around like 3 million. So just so my first question to you is, of course, hype is a word that initially had a kind of a negative connotation, appearing in the American slang as excessive or misleading publicity or advertising. Now it's kind of a big one, because in the end, it's hype. It's we call anything that is attracting our attention hype. So I won't ask you whether you consider it a positive or a negative thing in the industry, but I would like you to highlight one positive thing and one negative thing related to the developing NFT hype. Who would like to start? Sebastian.
I can jump in. Well, I do believe like a great thing around like NFT is definitely the benefit of true ownership for all users. And what it means at the end of the day, like anyone can launch their own collection of content and build a community around it. And from anyone, I really mean it. Like it could be just the parent from the house, any creator from any country, and now even celebrities. That's where the hype is really building it. And we believe we've been contributing to that hype at Sandbox with some of the IPs and brands that we brought in, more than 165. The most recent one we've announced has been Snoop Dogg, The Walking Dead, Deadmau5, more coming into our gaming. Overall, a very good thing, because that means like through the hype, there are more people, more eyes onto it, which means more creative attention behind, more users who are going to wonder and potentially enter the space and contribute. Now, what negative means is also like sometimes the hype can be short-lived and short-sighted, and that I think is not like the kind of sustainable hype and sustainable way to build the whole industry around it and the whole digital economy around NFTs, when you only think like, how can I do a drop, rather than how do I build a whole community and I bring value to people who are following that hype, essentially.
Mm-hmm. Yeah, I can go next. Yeah, this space is, it's wonderful, and NFTs are exciting. I participate, I'm preparing to launch my own, but the hype is actually going to cause extreme damage. The concern is people are buying into the NFT projects and trying to get in on the early drops or the mints or the pre-sales. But many of these projects, and I participated in some, sadly, are rug pulls, where they just don't come to life, or there's just no fruition. And it's going to give a bad name to the space. Also, there is, and by the way, in general, I'm pro this movement, but it's always important to point out the hype. And the other thing that's looming is people are jumping in, putting and placing money down that they're probably over leveraging themselves, and they don't yet realize the financial impacts, but they will in just a few months when they receive their tax bills or they have to fill out their tax forms. So we do need to pull back a little bit on the excitement and point out some of the things that are going to cause some damage. Otherwise, we'll be hurting ourselves as an industry.
Did I miss a positive thing, Jeremiah, or did you just mention it?
Oh, I gave the rest. I said I'm positive, but I didn't say what was positive. I think the positive things is that communities can self-sustain. Communities can build their own assets. In many ways, the crowd is becoming like their own company, independent. And during a great time of we're sequestered into our homes, people can connect online and find like tribes. And in many cases, the very mature NFT programs and collections are building their own economies, which they can self-sustain as a form of revenue, and as well as inventing new ideas and being creative. So there's the positive side.
Awesome. Thank you, Jeremiah. Alexei, please don't repeat. Yeah. And your part is the most difficult one.
Yeah, it's not a problem. So I think, in my opinion, the very good and positive side of this hype is that NFTs getting traction for mainstream audience, and NFT in some sense unique type of asset on a blockchain that is really interesting for a broader audience, not only very small crypto native audience such as DeFi, for example. And this is actually brings lots of new users in the space, in the whole blockchain space. So new users, first time they try to use MetaMask or crypto, trying to buy ETH. So this is really fascinating. And the whole NFT hype is actually growing the crypto space in general. I guess this is really good and positive, and a lot of people will stay after. What is like negative? Mostly, yeah, as always, so assets is overvalued. Sometimes you will kind of buy something much for much higher price than that you should buy it. So I guess this is the only downside for now.
Awesome. Thank you very much. I would also like to highlight, even though I guess that this goes without saying, but still I would like to say that any hype actually brings capital to the industry. And this is what makes us grow, what brings us more innovative potential. And of course, more we talk about anything, the more we actually experiment, and the downsides in the end can be gotten over sooner because of this attention. Okay, can we focus on what exactly is pushing this hype? in your opinion? And I honestly would like every one of you to talk about your respective sectors, because in my opinion, well, every part is very important. Sebastian, you are the guy of the community. And in my opinion, the community role in the whole process of building a new industry is very important. Also, speaking about gaming, I'm not a gamer myself, but I have a lot of friends, and my younger brother is a gamer. And a lot of people tell me that games now are the things that actually push innovations forward. The most innovative industry that gets mainstream adoption is gaming. That I'm pretty happy with, because before it was military sector. So Sebastian, what is pushing the NFT in the gaming? What and who?
Many factors come into play, and what I believe is what makes the most exciting part of NFTs in gaming is they have a real utility. So basically, you're not just collecting NFT for their aesthetic aspect or for their scarcity aspect, but really because you're going to actually use them into some sort of gameplay, whether you are like a cute animal that you breed and you use to fight, and then from those fights you generate tokens, resource, and those resources turn into revenue streams. So it falls into play to earn, typically, thinking about games like Axie Infinity or Formula One at the time. In Sandbox as well, like you buy NFTs that you're going to use to populate the land and experience you publish on into this virtual world. You get other users to come, and you can monetize those experiences. So you use those NFTs as your avatar. They become your identity, which then you can use to walk through all those virtual worlds, socialize, play with others. So definitely the utility aspect into gaming is much more important factor than what we've seen earlier this year, which is crypto art, crypto collectible, and other sport moments, etc. And that utility can come right away from the NFTs. Like I buy a creator, I buy an avatar, a weapon, an equipment, an enemy. I can use it in a game, and there's a potential for a yield generation behind, meaning I know what is the potential of a revenue that an asset can make from my skills into game, etc. That's what gamers are. A lot of gamers are about. Like when they make those decisions of whether I buy it or not, they look at all those attribute traits and they calculate behind. We've done that naturally in the industry, but there's also this whole new movement, which is called the avatar profile picture, or PFP, in the industry, which I think is has got a lot of community support, community-driven support behind, a lot of hype, but creates also a lot of competition. Competition is good because those communities have to compete on like what will set themselves ahead of the curve into the space. And the head of the curve is not just promoting 2D pictures without utilities, to find ways to bring utilities and value for those communities. And that value usually will come in the form of like social interactions in the virtual world again. That's where the whole picture of Metaverse comes from, NFTs. So that's, I think, where we're all heading from now. And the best NFT collection will come from the most creative community, who will be building content and continuing delivering value to the creator. And hence hype is positive, because if you do not continuously promote, attract people who are creative, are going to build and deliver value to the holders of the NFTs, that vision will not sustain, and those communities will start to die down, and hence the value of those NFT will probably fall. So that, in my opinion, it gets back to this point we were discussing.
Awesome. Thank you very much. Community is the force. Jeremiah, you work a lot with brands. So what is the role of brands in pushing this adoption?
Sure. Well, they're experimenting into this space. A few of the brands have launched their own projects, but they're struggling with how to deal with it when it comes to regulation and trademark information. So the most obvious one that recently happened is Visa acquired an asset and used it for its PR, CryptoPunk. But we've also seen some very successful brands like the Major League Baseball and also NBA basketball in America launch their own NFTs of the top shots, and as well as popular stadiums. Most recently, we saw newspapers launching NFTs, which is a fantastic way to reinvent their business models. So imagine if the content was distributed, not hidden behind the paywall, and the NFTs buyers would buy the NFTs with the articles and news and photos on it, and then spread them through blockchain on their accounts. And so the monetization could actually happen through distribution. This would literally save the journalism industry, who is getting beat up by big tech companies like Facebook, Wikipedia, or Craigslist. So this is an opportunity for those companies. I'd say the big winner that I'm watching right now is Disney. Disney is ramping up quickly, launching NFTs on Vivi, which is owned by Ecomi. And in a week or two, it's kind of on a separate network, small and quiet, they'll be connecting to Ethereum using Immutable X. So imagine the largest media brand in the world, which is Disney, Marvel, Pixar, and I'm missing one. What else they own? It's a lot. They have our Star Wars. How could I forget Star Wars? So imagine they're going to launch all of those assets as NFTs in combination with their shows, in combination with the movies and the parks. It'll be part of the fan experience. By the way, brands play different. My last point on this is there's 3 types of NFT collections. The first type are the innovative communities who build things like Bored Apes clubs, and they almost, or the End Project, where they almost become like DAOs, and they can actually create revenue by staking. People are leaning into invent. The second type of community is the one that Sebastian works on, which communities are collecting NFTs to enhance the experience, such as buying virtual assets for the gaming experience. Also valuable, none is better than the other. The third type of NFT community, and this is where brands are playing, is called fans that are collecting NFTs, and they just want to buy it. There will be less interactivity, although there will be a metaverse and augmented reality experiences and more than that, but it's really a read-only experience, not so much remix and write.
Thank you, Jeremiah. Okay, awesome. Well, while Sebastian is recruiting more people into his community in the channel, Alexei, speaking about marketplaces, just wanted to give you another analytic idea from the keywords analysis. And that is that the keywords for like NFT explained, what is NFT, NFT for dummies, it got its peak search volume in the beginning of this year, while the NFT marketplace actually peaked around August. It does mean that new opportunities also for newbies actually come by, and also how to buy NFT, how to make NFT. These are the keywords that are now trending. So what is pushing NFT adoption in projects like Rarible, and how do you see this development during this year evolving?
Yeah, so for marketplaces, definitely Rarible, it's a general marketplace. You can buy and sell all kind of NFTs on Rarible. We support 1155. It's editions NFTs, multiple NFTs, and also vanilla 721 NFTs. So bidding, trading mechanics, this is everything that all marketplaces is actually supporting right now. So what is driving the market? Mostly for this summer, it's like 99% actually in volumes and user base, it's PFP collections, definitely, aside of probably several games. For all other NFTs, it's just PFP right now. So what is PFP? PFP is just another use case and adoption case for NFT tech. So NFT itself, it could be used like in many, many different versions and different mechanics. A lot of experiments is going like continuously. Some guys try to, and still some events, they're selling their tickets through NFTs. Someone trying to sell physical items through NFTs. So there is like lots and lots of different use cases, but some of these use cases, they are really popular and some of them are not. And PFP is just very, very popular. So the basic mechanic is that you're buying in blind, so you don't know what you will get. And then the reveal moment comes and you see how rare this item that you bought, and it could cost like huge amount of money or like nothing. So it's kind of lottery mechanic at some point, and people really like this. And all the current summer hype is driven by this type of mechanic. This is now, but as Jeremiah mentioned, brands are coming. This is really, really good new vector for NFT adoption. But for different disciplines such as sport, like fan base, so this is one sector. Then movies, like media, it's like another sector. So all of them, they need like different mechanics. And now what is happening is, and you ask for future, so this year and like next year, we will see new use cases, new adoption of NFTs. I think PFP will be always popular because it's just people love it. But we will see like other use cases, such as before PFP, like this winter and spring hype. It was all about crypto art. So this use case was really popular, and it's still popular, but it's kind of growing still. But PFP adoption is just way too larger, and people love it much better. And I think we will see like new use cases and see influx of totally different user base. Because now still it's really few. It's, I don't know, somewhere around below the 1 million users who are actually trading NFTs, which is really small user base, because a lot of them are mainstream users. So in mainstream, we have like, I don't know, how many people using like Facebook or Google, right? It's like billions, and it's nothing. So we are in a very, very beginning of great adoption and growing of the space.
There will be another panel today about the future of NFTs, but the only thing that I would like you to think about in terms of the future is how the current hype is building up the regulatory framework and influence the attention of the regulators. You mentioned Jeremiah, Disney, and Star Wars. Star Wars NFTs were launched without respecting any copyrights to Disney. I don't remember which exactly platform, but anyway, this is just one of a lot of examples in the industry, and one of examples how regulatory attention is forming. So how do you see what is exactly happening now influencing the future of the regulations?
Mm-hmm. Yeah, so these big brands that are coming in will not stand for any PFP or any crypto project to infringe upon their trademark, and they will defend it vigorously. But that's great, because then they look in, they say, oh my gosh, there's opportunity. We can get 6% cut from every secondary, third, fourth sale for eternity. By the way, they get no cut from a sale of a comic book, right? A physical comic, they get no cut. But with crypto and blockchain, they can have recurring revenues for life, and they could align it towards everything. So as a result, these big brands, and there's going to be luxury, every single luxury bag company, every single car will have a digital twin that will sell for you to own. I expect to see some company like Zillow to launch NFTs of your home, which you may be able to mint, or they might want to resell it to you as a form of a transaction. So these brands see the opportunity. And when that happens, they'll ease up on regulation because they have influence over the powers that be. So I think it's a good thing to have brands in, although I understand why the first community, the innovators, are a little upset that these big brands are coming into this innovative space.
Speaking about hype, I can't help mentioning celebrities. This is something that definitely constituted a lot of hype in recent months. And according to a survey, I can't guarantee that there was a very representative survey, but still, like 2,200 United States adults, 45% of crypto holding respondents attention, indicated they would be likely to seek exposure to a digital asset if it's endorsed by a celebrity, 45%, compared to just 20% of participants overall. So how do you see the role of celebrities in the current NFT hype? And how will it be developing also in terms of educating celebrities themselves, and how many empty void NFTs we'll see in the future, compared to the recent months where we've seen enough of them? Who would like to talk about celebs?
I think celebs still only get traction right now, like first steps. We saw very few use cases, which is really kind of large one. So Lindsay Lohan did pretty good drops, Floyd Mayweather, and also Mike Tyson bought in some NFTs, and this grow into pretty good hype. But in general, there is like many other drops from celebs and sport players, which doesn't really get a lot of traction. So hard to say, probably it's in the future. Right now, for the current grow and hype of NFTs, celebs didn't do like too much or a lot. It's more about crypto and, I don't know, crypto art and PFPs, and yeah, celebs are just coming.
Bitcoin is the biggest celebrity overall, yeah.
So
True.
Well, I tend to differ. I think like celebrities, through their fund, they can reach out to billions of people, and they are somehow educating them progressively to what is the potential of an NFT and what can be made with that. It starts with defining your identity over social media, and we've seen more and more celebrities from Pharrell, Shaq recently, Snoop Dogg, which we work with, Denmark, and many other, own an avatar as a CryptoPunk or as a Bored Ape as a first step. And then now they start to buy more and more of those NFT collections that they endorse. They are part of the community, they bring their support, their community, their audience, their fan base, and much more creativity into it, which I think is really important. They also bring competition, which I think always competition leads to innovation in a good way. That's overall very positive. Yeah. The next step of today, for example, we saw Snoop Dogg who just acquired for 1,300 ETH X copy crypto art piece. But before that, there are a lot of celebrities actually that also start to understand much beyond NFT the potential of Metaverse, what it means to have like a presence into a virtual world where the content is made and owned by the community itself in the form of NFTs. Some of those celebrities include Snoop Dogg, Deadmau5, Richie, brands like Care Bear, Smurf, Atari, Square Enix, and many other entering Sandbox, and using this virtual world to create new form of interaction with their fan base. They are always looking at how do we lead the way in how we interact and we create value with their fan, whether it's through virtual fashion with sneakers, collaborating with artifact studios, or launching events to Decentraland, now launching even virtual concert, virtual show into Sandbox, selling their NFT tickets that has multiple utilities for their communities. So I find very, very interesting, and the speed at which it's happening, it's incredible. I think we've never seen that in any other industry, like how fast this movement is going. And of course, it's always hard to grasp everything happening in space, but overall, NFT is like a 4 years old industry, and in 2021, there's such hype in the positive way around what's happening. I think definitely the overall entertainment and gaming industry is changing and changing forever.
Awesome. Jeremiah, you wanted to tell something. We
yes.
are
out of time.
Finalizing the panel, but still minutes
Yes.
is
One
whole
of the
eternity.
reasons these celebrity NFTs are failing is because they lack utility. So they need to have access to a community like Snoop Dogg. You have access to his whole universe, which includes smoking weed, which is amazing. So it actually has to do something. You know, you get time with them, you get to a concert, you get front row seats. At that point, it becomes a social or utility NFT.
Awesome.
Yeah,
Thank you
agree-
very much.
agree on that.
Alexei?
Well,
Okay, guys, somebody in the chat just compared our panels with the speed dating, and this is definitely something that I have as an association. Even though I'm pretty slow today because it's tonight for me. Sorry, guys, I'm based in the other side of the Atlantic. Last question: a short wish to the NFT community for the next months to come. Alexei, sorry, I interrupted you, so please use this opportunity.
You mean wish?
Oh, yes, a wish, but it can be also your wish implemented in a wish to the community. You know what you want this community to achieve.
Interesting question. So, what do we wish? So just have some fun. I guess this is what I really like about NFTs. It's really fun.
Enjoy. Awesome. Thank you, Alexei. Jeremiah.
Yeah, so we need to see more utility, not just selling shiny objects. So it needs to be access to actually generating revenue or staking or from a metaverse. And I think that's where it's going to head anyways.
Thank you very much. Well, Sebastian dropped, but I would cite a French phrase then. Impossible n'est pas français, impossible n'est pas NFT, impossible n'est pas crypto. Everything is possible for the community because we want to make this world better. Thank you very much. Thank you very much for the organizers, for the audience, and for my wonderful co-panelists. Keep tuned. Thank you.
Thank you, Christina. Great job.
Thank you, Christina. Thank you, Alexei. Thank you, Jeremiah.
Bye,
and thank you, Sebastian. I know you jumped off earlier. Thank you for coordinating that. That was really great, Christina. And thank you for staying up so late to make that happen. So we shared a lot of concepts here. I hope everyone learned a lot from profile picture. That's one thing that I was learning. And also just to piggyback up on that concept, Snoop Dogg on Sandbox, he's definitely a celebrity, but one that, kind of transcended time, went through multiple generations. And so now he's jumping into NFTs and Metaverse. So amazing indication. Nate, welcome. All right, so
Hello.
Nate from Mintbase, excited to hear from you and see your presentation. Thank you for the time.
Yeah, thank you. I heard the last big thing they were suggesting is there needs to be more utility in NFTs. So our entire world is about becoming the next gen utility NFT engine. That's the big one.
The timing is perfect. So let's do this. You have 10 minutes. I'll give you a notification at the 1 minute mark. And excited to learn more about Mintbase. There's a lot of people here asking about it. So Jeremiah wants to see that utility.
Cool. All right. So 10 minutes. I will go in. Let's file open. All right. So if you want to understand what Mintbase is, basically we have two different worlds. This one's the easy one, pioneering utility NFTs. The harder concept takes a little bit more time and effort to jump into our world, but business model engineering will be one of the most creative jobs in the future. Mintbase is the Shopify to this ideology. What does this mean? Well, you have to first understand what we've built. We've built a minter, market, and redeemer. We've built a protocol and dev tools to allow people to build their own minter, market, and redeemer, and we have our DAO. So we think the future isn't just one market. We think the future is everyone being able to create their own niche markets and having those spin up all over the world, creating their own redeemers, whether it's getting redeemed on Nike to actually send you a physical shoe or to check you in at a conference or any of those different groups. Yep, there's some stuff. Let's go into what is Mintbase. So this diagram, we enable all of our users to deploy their own store on Mintbase. What this means is this is your own smart contract. This is your own API. A company like Twitter has an API. They just have a set of functions, and that's what a standard is. The 721 is literally just a list of functions. So we've always been developing in this way where users deploy their smart contract. They create things, and every single chair is a token. The future should be more about how these tokens are being used. When I buy the item to go redeem it, doesn't mean I'm the one who's actually going to go in and get the chair. I might list it for auction as the event gets closer. I might gift it to a friend. I might sell it on some weird different way. Once you start getting into this world, what is an account? Account could be a human, a DAO, a company, a nonprofit. And these deploy their own stores. They can add minters to these stores. These things can be multiple different items. And on Near, we are on the Near blockchain. You have your up to 25 split royalties, which are the folks that were part of the creation of the asset, and then 25 split revenues. So to actually jump into what we built, it's pretty neat. So we can go into here. If we go into this, these are all my smart contracts that I've deployed. Smart contracts in the future might be as simple to organize as directories. I've been added as a mentor to this Buildiverse store, but I created this Wilda store where we actually redeemed 3D beers at a festival. So we have this beer, we can see them in their auctions. We can have multiple different auctions. You can see one point near was overtaken. Let's go into what does a redeemer mean? So if we go back into this smart contract, we see view. Every store gets their own virtual reality metaverse, which is neat. Go check that out. That's 3XR. You have my mentors to the right. We have how much I've earned. We even can go into this redeemer. Is if I hit a QR code, you can actually see all these different beers getting burnt simultaneously. We ended up actually going to a festival. Let's see if I can thumb through it. And yeah, I skipped the ETH Paris so that I can go to this. We actually had people go in, we airdrop beer tokens, and they were able to burn it and redeem it at the different system. So super, super neat world. Let's see, where else can we go? Check out this Medium post I posted last week. We upgraded 544 NFT contracts. The way Near does their account system is amazing. Every single app or DApp you connect with creates its own private key pair, so you can give allowances, you can give read calls to specific functions within your smart contract. Near is literally the most underrated technology in the world. They have the worst website and the most amazing tech. So we've not been very outspoken because we've literally been heads down just building this entire time. Barely being able to really come up and see what's going on. So back into MySpace. So we have notifications. We can send you offer deep links. We have how much have I earned. Again, we can see all these different transaction hashes every single time something happens on Mintbase. We want you to be able to go into the Explorer and check out who did what, where, why. So imagine 50 different accounts can get funded immediately after a purchase of a thing. Then you can see all that different records on this sort of Etherscan-like system. We have a testnet. So why do we have a testnet? Testnet is the most important thing when you want developers to build on your system. So being able to kind of go into our developer system, we also have our own indexer. We're running a full node where if you come into here, you can actually pop in, whether it's mainnet or testnet, you can see all the information on a store. Here's all my different stores. Maybe I want to see all the things on a store. Maybe this is the VIP section. Maybe I want to see the metadata. Let's go into here and let's go into Arweave and check out what's happening over here, .net. We can get all that bits of information. Here's our image, a record. None of this information can change. It's quite exciting. We also have Mintbase.js. All the transactions we do on our platform are done through this. So mint, buy, sell, deploy, store, off you go. So you'll be able to do all the things that we're doing. I'm really excited to kind of unleash this. I'm excited for people to understand how Near works a bit more. I'm really excited for minds to get a little bit open past the what would you call it? The tribalism. Rust is amazing to write all your smart contracts. We literally rewrote everything from scratch in Rust. Yeah, let's do crazy stuff together. Okay, I think I'm done, right? Nope, I still have 2 more minutes. Yeah, we've got profiles. You can come in here if you want to go into your smart contract. So here's all my different contracts here. Oh, that's testnet. Let's go back into mainnet. So if we want to go into, let's say, my Vilda store again, if we want to go into settings, this is my contract settings. We can see that all my transactions here. We can add minters here. We can set royalties of the overlord store. So every time my minters actually mint and sell, I get the overall royalty of that contract. Yeah, we can go see all the transactions. This is one contract deployed on Mintbase. We deployed to Mintbase 1. Every transaction here is open for anyone to see. This is why if you're going to deploy a store for ticketing, you want your own contract. It's your own world and ecosystem. And thank you.
Hey, thank you so much. That was a quick deep dive into the utility of creating, the NFT and actually some of the backend. Thank you for sharing that.
Oh yeah.
For those of you who are asking, there's a lot of questions and people are just getting into NFTs. So we heard about the hype. Nate just talked about how to create an NFT on their platform. It's so interesting to hear, Rust has been repeated probably 5 times on this crypto conference so far. So that's a great indicator of that. That Rust is something you should look into if you're trying to get into crypto. All right, so let's move on. Thank you, Nate. Thank you for that presentation. Yep. Moving over to the next speaker, we have David Snyder from Lit Protocol. So kind of continuing that trend, you see different applications hype to even minting an NFT. So we have Dave here kind of teaching the next evolution of what an NFT could become. Welcome, David.
Hey, thanks. Pleasure to be here. Thanks for everyone. Yeah, I can jump right in.
Yep. All right. So you have the floor. I'll let you know at a minute remaining, but you have 10 minutes.
Excellent. Can you see my screen all right? It says the maturation of the internet. Wonderful. All right. Hello, everybody. My name is David Snyder. I'm the CEO at Lit Protocol, which is a trustless access control protocol, kind of a middleware. But I'll tell you more about that in a little bit. What I want to talk right now about is a specific prompt, which is how old is the internet, as a way to kind of zoom out and put things into perspective of where we are in this industry. So of course, we know the internet is about 40 years old. People mark the start date or the birthday of the internet when ARPANET and the Defense Data Network both adopted the TCP/IP standard. But there's certainly more than one way to think about age and maturity. For example, we have this kind of notion of dog years. You probably are all familiar with the heuristic of 1 dog year equaling 7 human years, but fundamentally, this is a measure of maturity. And so now, bouncing around a little bit, if we look at development in humans, there's this notion of object permanence. And so object permanence in babies is when the child basically knows that something exists even when they can't visually see it. So when you play peekaboo with a baby, essentially what you're doing them is teaching them object permanence. And so a little bit of a leap, but my claim is that just 11 years ago, the internet achieved object permanence with Bitcoin, which was the first resilient asset, basically an asset that existed outside of platforms. So in terms of how old is the internet in internet years, the internet is a toddler and we have a whole lot ahead. And so this begs the question of what does the internet look like when it's growing up? Now in the early stages of development, what we call Web 2, we had the attention revolution, the mega platforms emerged. On those mega platforms, there are super engaging ads and UX. And we're seeing this kind of like highly engaging thing happen across society, advertisements on TV and elsewhere, and then of course on the internet. And the economic model that emerged in this kind of prodigy era of the internet is the attention economy. And now what we're seeing emerge is what some have called the backend revolution or Web3. And there's a whole new class of different infrastructure that is emerging. Open source protocols, focus on sovereignty and privacy, and user-owned DAO networks. And it's worth talking for a moment about where the assets live in each of these two worlds. So in the platform world, the assets all live in the platform. These are in-game items like NFTs, and also more abstract things like the social graph. You often hear Facebook and LinkedIn described as walled gardens, because even though the users are generating things like the social graph, they are in fact owned by the platforms. Now, one of the promises of Web3 and this backend revolution is kind of decoupling that. And so inside of Web3, we essentially have two types of data that is no longer explicitly owned by the platforms. One is the open data that is on these open protocols like Ethereum, for example. And then because in this new paradigm, every user is associated with an asymmetric key pair, that key pair enables them to access encrypted data. So even if that's data they don't explicitly own, they can have exclusive access to it. And so this is happening in a big way right now. This is a graph of the number of unique wallets that have bought or sold an NFT asset over time. And it's not just happening inside of blockchain and NFT land. We also know that there's kind of a cultural sea change happening as well, where the privacy expectations for platforms are increasing. Big hype around Signal earlier this year. And yeah, so that is kind of the zoomed out view. And now in terms of what we are adding to the ecosystem at Lit Protocol, what we are building and have built is a access control protocol for granting wallets access to off-chain resources when they meet certain conditions on chain, such as owning an NFT or being a member of a DAO. And so I'll tell you about 3 examples of that now. First things first, we've integrated a Lit protocol with IPFS. You can go check this out at litgateway.com/files. And this will allow you to upload any document, any file. And then if you've ever used like Google Drive or Dropbox, you know that the share dialog is email based in the Web 2 world, but in the Web 3 world of asymmetric key pairs, we can create conditions based on the data that exists on the blockchain, such as saying only the owner of a given ENS domain can access a file, or only people who own 2 CryptoPunks can access a file. Another example of this in action is integrating access control with existing Web 2 apps. So we've built an integration between the Lit protocol and Zoom, whereby users can create token-gated webinars and token-gated meetings. And this kind of access control layers is super generalized. And then one more example I'll show you is embedding locked content inside of an NFT. So as you can see here, here's an NFT that's owned by me, and it's got an unlock button associated with it. Currently, OpenSea doesn't support communication with MetaMask, so I'll go ahead and click this button here to open up the NFT. And then you'll see, because I own this NFT, I have the ability to unlock it. And so what this is an image that has been encrypted inside of an NFT. Could be a video, content, software, whatever you want. And only I can access this based on the access control conditions that were set up, which are in fact reading the blockchain to see if I'm allowed to get that resource and decrypt that resource. So that's what we're up to. We're definitely excited about a lot of opportunities to work together with the community in the context of helping projects with access control, helping projects with customer acquisition, and in general, building out the next wave of DAO tooling as we move towards a world of secure and serverless and private applications that serve users, not just as well as the Web 2 apps, but better than the Web 2 platforms, because there is the notion of interoperability inside of our new world. Thanks for your time.
Thank you, David. Thank you for sharing Lit Protocol. And that's kind of the, the evolution of what NFTs, could be. So thank you for sharing that and kind of giving us some context. So make sure to share your details also in the chat, because people are asking some questions. So you can drop it down there so people can follow you. Yeah, litprotocol.com. All right, so let's bring on, thank you, David. Let's bring on our next panelists. We have Dan Thompson talking about InsureAce. So this is a pretty talked about topic right now, especially with DeFi, the concept of insurance to cover, those assets, those interests, and Dan will be presenting on that and kind of giving an overview, but it's a really interesting topic that a lot of people are talking about since going into DeFi. So Dan, welcome.
Hi guys, thanks for having me.
Yep, it's good to see you. All right.
It's been great. I've been following some of the we've been talking about, so it's nice to see that you've got a great bunch of panelists today.
Yeah, it's been
all right.
It's been an awesome crew
about InsureAce.
All right, so you have the screen. I'll let you know at the 1 minute mark, but excited to hear from you, Dan.
Cool. All right, let's just go into this. So yeah, we're going to talk a little bit about crypto insurance and specifically towards DeFi. We're going to explain some of where the current situation is, why we need it. And I'm Dan Thompson. I'm the director of marketing and business development for InsureAce and .io. Is a platform built on Ethereum, also deployed on Binance, Smart Chain, and Polygon. And I'm going to apologize for a very weak internet signal today. Hopefully it comes through okay. So we're going to talk. There we go, a bit behind. Okay, so I think everyone here is probably very aware of the recent hacks in DeFi and in crypto space over the last sort of year and a half since DeFi has really sort of blown up. And it just seems to be getting, increased levels of these hacks, up to the level of Poly Network with the largest hack in history of the $600 million mark. And these projects, there's nothing necessarily wrong with the projects. They're great projects. Sometimes you get great teams, even with audits, bug bounties, the full works, but sometimes they're still not doing enough to mitigate the risk of these hackers coming in and finding exploits in the protocols themselves and stealing away people's money. So that's kind of where insurance as a solution comes through to mitigate that risk, to guarantee the funds of users and even the protocols that might want to guarantee their own treasuries and provide insurance for any losses that they might experience themselves. So these are the traditional ways of managing that risk. So most protocols at the moment will launch or come up with an update, and they'll bring out an audit with reputable auditing firms for their smart contracts. Some might do 2, 3, 4 even more sometimes. The problem with audit is because of this, they're so inundated. Some of them are fully booked all the way through until 2022. Some are even taking bookings even further in advance just to have them booked up. Now, there's nothing wrong with audits. Obviously, they're great checkups, and they should be done by every protocol. But does it guarantee any extra safety in the protocols themselves? Arguably not. Not necessarily as and apologize to the auditors, not necessarily motivated as hackers. And bug bounties, on the other hand, white hat hackers can be a better solution, paying hackers to dig into the code, find these problems, become a big problem. At the end of the day, it still might be available. These teams building these protocols are still, really, really great engineering, great development. So what can we do to avoid that risk? And the answer really is DeFi insurance. Providing that sort of that you lose money because you've got them staked a farm somewhere, and those assets get taken away from you and siphoned off to a different account. You have that extra backup, that ability to sleep easy at night, knowing that that your funds are safe. And that's where DeFi insurance and protocols like InsureAce come in to help out. And this is just basically because, there are no other guarantees. In traditional banks and traditional finance, you've got either governments or businesses guaranteeing your assets. Now, in DeFi, that's not necessarily the case, and we all know that's not the case. That's the reason we're here. So that's where you need to take that extra insure your assets. So here's some case studies. So a stablecoin project where we're pretty much a guaranteed fixed return of 18% annually. We offer a 2.5% insurance on it, plus a DPEG insurance, which got brought out last week, which means you can basically get fully covered with a guaranteed return, guaranteed fixed rate return of 4%. Given the market varied us these days, it's incredible. Same with auto farm, you might get some very higher yields in traditional DeFi staking options, or even centralized exchanges and other custodians like Binance, like Coinbase, where it's not necessarily directly connected to your wallet. This will also extend to other wallet insurance in the future. It's essentially decentralized risk. It passes the risk of your exploit of your assets off across multiple different people, protocols, as pools, or it can be one centralized pool, spreading that risk into one pool. That means that there is available capital to pay you out in the event of a hack. Stakers in the protocol itself, the insurance protocols with any sort of reserve capital based exclusively for payouts, and any sort of reinsurers who then back up the existing insurance protocol in the event that and how does that actually work for governance? So this is where tokens come in, and a decentralized in the event of a claim, we'll go to an insurance expert team who run the claim itself and provide a sort of recommended vote. The community then votes on whether or not that gets paid out. Now, this speeds up the process dramatically, which means you get paid out in a matter of days instead of weeks, months, even years sometimes with traditional insurance. How to insure your assets. Now, again, it's so simple. It's DeFi. You connect your wallet to a protocol. You decide how long and how much cover you want, and any of the available payment methods could be from Ethereum, stablecoins. We're also, like I said, on Binance Smart Chain, so you can pay in BNB or Polygon. And that's just for us. Other insurance protocols will also have their own various options as well. Where does this lead us? Now, insurance as a sector currently only insures roughly about 2% or less than the overall TVL in DeFi. Now, this is tiny. This is where there's such huge potential for DeFi insurance to come through strongly. There's been a few hesitations. Obviously, it's a new nascent industry, and a few things can be developed. So in the future of this, the way we're looking at improving is a launched API to move up towards a zero-click integration, which will basically mean that you might lose a couple of percentage points on your DeFi gains. However, you'll be automatically insured in the event that your funds get exploited and attacked and stolen. The protocols themselves might want to take out a substantial chunk of insurance to be able to repay any exploit on users' funds. And then in the future, other types of insurance will come through, including NFTs, market volatility, and private key loss, which so far have not been able to be covered. These are our details if anyone wants to cover. And I'll also share some websites. Sorry, about a minute quicker than I thought I was going to be there. So I'm just going to come out of this and we'll go for a quick sort of wander through our app. So this is how easy it is. You go onto a DeFi insurance protocol like InsureAce. You'll come through to our insurance page. You can as well find a particular protocol you like, which is where to anchor or auto farm, for example. You can select auto fund. It goes into a basket where you can do multiple of these at the same time. Sure, I don't or while you're in them, and the automatic calculation will calculate your premium, and then you just and pay it, and it's that simple. And you're protected, no KYC needed. I'll be available for questions. You can reach out to me personally on. So yeah, here you go, 10,000 USD or 30 days through our DeFi protocol, InsureAce.io. Like I said, I'll be available. You can meet at Vagrant Crypto, but please do join our Telegram community as well, and feel free to ask any questions.
Thank you, Dan.
I think we
Thanks, Dan. So that was really informative, and I know internet was cutting in a little bit there, but overall, that's a great topic to have covered here. Thank you, Dan.
And thank you to everyone. We wanted to encourage all of you to pay a lot of attention to some of these projects ourselves. Going back to our March conference, we had on Star Atlas before they did their token sale. We also participated in another project called Yield Guild Games that was referred by one of the panelists. We have Mark Yusko and Brian Estes. Every time I talk to these gentlemen, I literally am taking notes, and very, very great insights from two well-respected VCs and early investors. And thank you to the both of you for joining us.
No, thanks for having us.
Yeah, thank you.
So far today we've had, if you've been listening on this conference, we've had some amazing speakers. I know we had like Solana, we had Casper, and now we have Mark and Brian. Super excited. So if you can give a quick introduction. I know the two of you probably need no introduction, but if you can just tell us a little bit about you, what you do, and just frame it out for everyone here.
Mark, go ahead.
All right. So reverse alphabetical. Usually I'm last, way up in the upper right with the Yusko last name. So Mark Yusko, I am the founder, CEO, and CIO of Morgan Creek Capital Management and the managing partner of Morgan Creek Digital. So we formed Morgan Creek Digital 4 years ago to focus on investing in infrastructure around the digital economy. We're raising our third venture capital fund today. Had some nice success in our first two funds. Those funds invest 70% in the equity of underlying businesses and 30% in liquid protocols. We also run a risk-managed Bitcoin fund. This is not an advertisement for it, but the embrace volatility. Volatility scares everybody. I love volatility. I think you want to own volatile assets, but you can use tools to manage that volatility. And then we partner with Bitwise on something called the Digital Asset Index Fund. So I've been spending most of my time these days around digital assets after spending most of my career in everything except digital assets.
And I'm Brian Estes. I'm the CEO and CIO at Off the Chain Capital. We're one of the only value funds in the blockchain space. Basically what we do is we provide a liquidity pool for early employees and seed investors at blockchain companies to sell equity into. That's about half of the portfolio. The other half of the portfolio, we're looking for mispriced digital assets. We're one of the largest buyers in the world of Mt. Gox bankruptcy claims, which allows us to get into Bitcoin at significantly discounted prices. Like Mark, I come from traditional finance. I was in the traditional world for 20 years before I started helping to build blockchain companies back in 2014. So I was, early and, blessed to, understand this, before a lot of people did.
Awesome. Well, Mark, Brian, we just love the way that you think in your framework. So really, this panel is about just the two of you in this discussion of your mindset, what you're excited about, just everything that's going on in the industry and what you're working on.
Yeah, I mean, I'll just lead off with just one quick kind of framework. And and then throw it over to Brian to talk specifically about a lot of things that they're working on that are really exciting, in the sense that, if you think about the financial services industry or ecosystem, it's the largest economy in the world, or largest industry in the world. It crosses all economies globally. It is orders of magnitude larger than other industries. And it's basically been slightly impacted by the internet and the mobile net, but it's about to be completely disrupted, and you guys have been talking about it all day, by blockchain technology and the evolution of solutions around financial services. And as we go from TradFi, traditional finance, to CFI, centralized finance, to DeFi ultimately, and then to other things like play to earn and Metaverse and all of those other applications of blockchain technology, it is the greatest wealth creation opportunity I'm going to see in my lifetime. It's the biggest disruption by orders of magnitude that I'm going to see. I mean, people think about markets in a weird way, right? They talk about stocks, GameStop and IBM or whatever. Stocks are a tiny little market. Bond market's way bigger, orders of magnitude bigger. Currency market, orders of magnitude bigger. Derivatives market, orders of magnitude bigger. Why is all of that still run by humans and machines that still run on COBOL? Visa today, imagine this, Visa, right? We all use it, still runs on a mainframe computer running on COBOL. I met with the guys from Visa the other day. They joked, when the computer breaks, we put on a red light at the Sunnyvale retirement system and a bunch of 80-year-olds come over and fix our machine. That is not long for this world. So this emergence of technology that we're seeing, and the migration of talent, and this conference is an example of that, the migration of talent into the space like nothing I've ever seen, right? In the 90s, there was a migration into the internet that was amazing. And companies like eBay and Yahoo and Google made us and our investors lots and lots and lots of money. This is, again, orders of magnitude bigger than that. And the quality and quantity of people migrating into this space is incredible. And I get more excited every time I talk about it.
Yeah, Mark's 100% right. So what got me excited about blockchain technology was back in the early 80s, I was one of those computer whiz kids that used to code in Fortran, COBOL, Pascal. And, I probably should have majored in computer science in college, but I ended up getting an economics and finance degree. But when I first read the Satoshi Nakamoto white paper, I understood as clear as day how we're going to rebuild our entire financial system, exactly because what Mark just pointed out, that our legacy financial system is built on ancient computer language, and that was piecemealed together over the past 60 years. And blockchain technology completely disrupts that. And one of the things that we should all look at is what's called S-curve analysis. I've been using this throughout my entire career over the past 30 years to identify what are called megatrends. So you could use S-curve analysis to identify these new technologies, these disruptive technologies. And you could use this going back to the 1400s when shipping companies were the new technology back then, and then railroads in the 1800s, automobiles in the 1940s, fax machines in the 70s. And it's all the same S-curve. And basically what that S-curve says is that the amount of time it takes for a new technology to go from 0% adoption to 10% adoption is the same amount of time it takes that new technology to go from 10% to 90%. And so Bitcoin was invented in 2009, the first blockchain. In 2019, 10% of US households owned Bitcoin. So it took 10 years to go from 0% adoption to 10% adoption. In 2020, Brian Brooks, the comptroller of the US currency, was being interviewed on CNN, and he mentioned that 15% of US households owned Bitcoin last year. And there was a study that came out in February of this year. It was with 30,000 surveyed individuals in the US. And that survey showed that 25% of US households owned Bitcoin in 2021. And then Bakkt just came out with a survey about 3 weeks ago. Bakkt is owned by the Intercontinental Exchange, which owns the New York Stock Exchange. And their survey showed that 48% of their 2,000 people surveyed own Bitcoin. And so we're on this massive adoption wave. And what this shows is that in year 2029, 90% of US households will have some sort of exposure to digital currency. And we don't know if it's just Bitcoin only or DeFi projects, but you would think it's going to be a combination of a bunch of things. And so as Mark mentioned, that the best way to accumulate wealth is to identify these megatrends. And we're in the megatrend now. We're in the fast adoption phase. So there's going to be a lot of wealth created over the next 5 to 10 years.
Yeah, just to that point, if the people on the call here have not read the book, The Great Boom Ahead by Harry Dent, pick it up, read it. It's an easy weekend read, and it explains how S-curves work. I read it early in my career, and it changed me forever. And like Brian, I can't live without this construct of S-curves, because everything follows it, right? You get the innovators, and they're laughed at, they're ridiculed. Then you get the early adopters, and then there's the chasm. And the chasm is the hard part, right? That's the trough of disillusionment, and that's when everybody thinks it's the bust. And that's 2000. Pets.com, right? The epitome of the failure of the internet. Chewy.com is a $30 billion company. It's the same damn company, exactly the same. It's just we needed broadband, and we needed distribution networks, and we needed Jeff Bezos to come along and be successful at moving product off of online retail or off of in-person retail to online. And we're still early in that trend. So all of these things, it's like my pinned tweet on Twitter, right? At Mark Yusko, if people care. The greatest wealth is created by investing in something that you believe in before others even understand. You'll be mocked, ridiculed, and criticized for your non-consensus action. It's totally worth it. And look, we just went on Friday, we went from the first they ignore you, 2009 to 2015, then they laugh at you, 2015 to 21, then they fight you. So the fight just started. China just laid down the law on Friday, made all cryptocurrency transactions illegal. Now they banned Bitcoin in 2013, lip service. They banned it again in 2017, a little bit of more than lip service. This time, they're actually serious, and they're serious because their banking system is bust. If any more money flows out of the banking system, they end up in the Great Depression, part 2. So they can't allow that to happen. So there's a fight, and that fight is important, and we all have to fight for the next 4 or 5 years. But on the other side of this trough is nirvana. It is all of the applications that will be built on these base layer protocols that we're all installing. And it's so big, it's hard to even comprehend, 1, how important it is, 2, how strategic it is, and 3, that it's 0 probability that it's not going to happen, right? Name a new technology that came along that was put back in the bottle. I'll wait. Can't do it.
Yeah, just to add on to that, let's just look at like long distance. 10 years ago, we paid long distance phone bills. When's the last time you paid a long distance phone bill? And you may ask the question, well, why don't we pay long distance anymore? And the reason is because there was a piece of software invented called Voice over Internet Protocol, VoIP, that allowed the transmission of voice through the internet. And when that piece of software was invented, it basically caused the long distance companies' business models to go to 0. So, MCI and WorldCom went bankrupt, and people say it was because of accounting fraud. Well, the accounting fraud didn't cause the bankruptcy. What caused the bankruptcy is that their business model went to 0 because people can make free long distance phone calls. And if you look at how the world moves its money today, we spend $2 trillion a year in cost to move our money. These are Visa card fee, Visa, MasterCard, bank wire fees, PayPal fees. And if you add all that up, over the world, it's $2 trillion. And you have to think that now that we have money over internet protocol, that $2 trillion is probably going to go down 90 to 95%, if not down to zero over the next 10 to 20 years.
I don't want to keep piling on each other, but Brian's again 110% right, because voice over internet protocol changed the world, and the internet changed the world, and the internet was a big deal, right? Paul Krugman said it would never be bigger than the fax machine. It's a little bigger than the fax machine, and it all started from a single web page, right? Tim Berners-Lee, not a rich guy, he invented the internet, not Al Gore. Tim Berners-Lee invented the internet, and he took this thing that we're using right now called TCP/IP, base layer protocol of the internet, and he wrote a web page, a single web page, 9,500 lines of code, and invented www. Okay, the rest is history. So now what the cool part is, he just turned that 9,500 lines of code into an NFT, and Sotheby's is going to auction it, so he is going to become a richer guy. So that's pretty cool. I really want to buy it, but I don't have enough to buy it. So somebody with a lot of ETH is probably going to buy it, like the guy that bought the Beeple, which I don't really get that one. Although I will say one thing about the Beeple, I don't really like the art, no accounting for taste. I do respect the fact that I'm certain that I have not brushed my teeth every day for the last 13 years. I went on a couple camping trips, forgot my toothbrush. That dude made a piece of art every day for 13 years. That's valuable. That's pretty cool. But the point here is that value over internet protocol is the biggest innovation of this century. There's nothing close. And if you haven't read the Chris Dixon thread on tokens and why tokens matter and why everything in the world, every stock, every bond, every currency, every commodity, every piece of real estate, every home, every business, every piece of art, every case of wine, everything will be tokenized. And why tokens, like websites are the ability to make information flow freely two directions. We went from 1 in 1994 to 1.7 billion today. And Google owns half of them, which is kind of crazy. Because every time you type something into Google, they create a new website so you can find it fast. Genius. That's what indexation is. But tokens, there will be more than 1.7 billion, orders of magnitude more than 1.7 billion. Everything will be tokenized, and it will allow value to be exchanged two directional. And again, the benefit of building on top of previous technology, there were no computers in the 1940s, except in governments. 1954, the mainframe came along. The center of the universe was in Boston on Route 128, DEC, Wang, and IBM. And then 14 years later, there's an innovation out in Silicon Valley. Nexus of the universe shifted to Palo Alto. Don Valentine invested in this little company called Intel. The rest is history. Suddenly we had small computers, small businesses. The chairman of DEC famously said, I can envision a day where someday a computer would only weigh 1.5 tons, but there'd be no reason for anyone to ever have a computer in their house. In 1977, he said that. So in 1982, right, personal computer was invented, a little company called Microsoft. All my friends from childhood don't work. I grew up in Seattle. They went to work. I was too stupid. If you ever seen the picture of the original Microsoft 11, you forgive me. We all looked a little rough in the 70s. They look rougher than most. They're billionaires. I'm not. So that's okay. They're successful. But I didn't go to work for Microsoft. Steve Ballmer's mom said, honey, why would you work for that company? No one wanted a computer in their house. He has 18 billion reasons he was right. Mom was wrong. 14 years later, why it's always 14 years, I don't know. It's because young people create everything new in this world. And it's about half generation, the creative class. So 14 years later, in 1996, I'm sitting in South Bend. We invest in this little company called Sequoia. They invest in this little company called Google. $500,000 turns into 200 million. There should be a quad at Notre Dame called the Google Quad. And that was great, but that was crappy technology. Client server technology was crappy. Then in 2010, we had this innovation called the mobile net. And this thing came out. Stock price of Apple went down 40% when they released this. Went down 40% because people didn't get that. Why do I need that? I got my flip phone. It works just fine. I don't need a smartphone. Ridiculous. Fad. No, it's not a fad. This is the mobile net and everybody is connected. And I remember asking the Craig McCaw's family office guy, do you think the mobile net will be as big as the internet? It's like, Mark, are you kidding me? Ask me if they want a computer. Like, yeah, whatever. Ask them if they want a phone. They say, well, I already have 2 I don't need another one. Yeah, mobile net will be bigger. And the trust net, which is 2024, still 2 years from now, okay, 2-3 years from now, is bigger than that because we're building on better technology and we take advantage of exponential math. See, people are bad at math. If I say what's 2 times 2, everyone on this call says 4. If I say what's 17 times 23, I'll wait. That is the limit of human intelligence. The average person cannot do that in their head. They need a calculator. So if I say, how are you at nonlinear regression? Probably not very good. If I take 20 linear steps across the office, I get to the other side. If I take 20 exponential steps, I go around the world twice. Exponential growth, growth of networks, growth of the ecosystem that we're all working in grows exponentially, not linearly. And it's why value over IP is the greatest invention of all time. But I don't feel strongly about it.
Yeah, and Mark and I come from the asset management side. So it's important to recognize how to make money in blockchain too. So when the web started, we couldn't own stock in like HTTP or SMTP. You couldn't own the protocols. The only protocol you could really own were domain names. And so domain names you could buy and hold on to those, and those are accrued in value. But most of the value accrued to the companies that sat on top of the protocols. So that's like Amazon, Netflix, Google, eBay, Uber. These are internet companies that sat on top of the protocol layer. When you look at blockchain and blockchain companies, it's completely flipped upside down. If you add up all the value of the protocol, so these are like Bitcoin, Ethereum, Binance, Solana, Cardano, you add all those up, you come up with close to $2 trillion worth of value. But if you add up all the value of the companies that sit on top of those protocols, like Coinbase, Kraken, Digital Currency Group, BlockFi, you come up with about $200 billion. So most of the value is accruing in the protocol layer. It's not accruing into the company layer. And that's an important fact to understand when you're comparing how do I invest in blockchain versus how do we create wealth in the internet.
Brian and Mark, what are some tangible next steps that the community can take now to learn about these new technologies and like what specifically should we be paying attention to and following?
Well, first is to attend events like this and let you guys curate the best and the brightest, maybe present company excluded, all the crypto kids you've had on earlier that are doing amazing things. I mean, look, I love my job, right? I get paid to talk to the smartest people in the world all day, every day. It's awesome. And I've never had more fun in my 35 years of doing this. And that's not because I didn't like my job for the first 30 plus years. I loved it. But this is more fun because we're dealing with a pace of innovation that just we've never seen before, and a scale of innovation and an impact of innovation that is really incomprehensible. I mean, some of the numbers that Brian was throwing around. And so the next steps are, one, get educated, right? Spend time, go to lop.net and devour everything on his site. Read the white paper from Satoshi Nakamoto. Read other white papers. Go and listen to podcasts. There are a gazillion great podcasts on the space, and just devour. And also just do it, right? I mean, that phrase exists for a reason. Action beats inaction. Most people are less well off because they fail to act. And particularly when they're young, you're afraid, I don't want to. You should make all of your mistakes when you're young, when they're not costly. You should make all of your portfolio investments as long a term as possible. It should actually be against the law to buy bonds in your 20s and 30s and 40s. It should just be against the law, right? That's the worst investment you could ever make because inflation is going to chew up all your gain. It should be mandated that you put all your money in venture capital and long-term projects because that's where the wealth is created. And so if you think about being a young person today, what you want to do is leave the staid, boring job and go find a startup entrepreneur, go find a project that you're passionate about. And even if you want to keep your day job, start investing, get a couple wallets, start to buy some protocols, start to play, have an AAVE account, right? I did it just to see how it works, right? Before I wanted to invest lots of money in DeFi, I actually, took out a loan on AAVE. I actually pledged some collateral. I actually staked some coins in a yield farm. And all of these things get you more comfortable with the innovation because, look, not all of us can be great at everything. I'm not a techie by nature. I'm an investment guy. I get to partner with great techies, but I couldn't tell you how TCP/IP works. I couldn't actually tell you how all the details of this blockchain or that blockchain work, but I know people who do and want to partner with them. So just do it would be my biggest piece of advice.
Yeah, I agree. Just do it, and also be curious. That's what got me involved. Is I just found it interesting. I was curious, and coming from traditional finance, when I first learned about Bitcoin, I thought it was a total scam. This is 2014. All I could hear was, it's this internet funny money. It's used for nefarious activities. Who wants to be involved with that? But I actually took the time to dive into it and figure it out. And it took me about 6 months because, you can't take a Bitcoin class back in 2014. But, you have to, a lot of the work just comes from being self-educated, going out and being an independent thinker and going, and finding, things that you're interested in and diving into them and trying things out.
Yeah. And to that point, do the work, right? Just do it is one thing, but do the work. And look, I've never met anybody who I respect who didn't start skeptical. And that's totally logical. Why? Well, because of FUD, right? Fear, uncertainty, and doubt. Any innovation will be met with FUD spread by the incumbents, right? When the horseless carriage came out at the turn of the century, the street sweepers passed out pamphlets saying that you would die if you got in a horseless carriage. Why? Because they didn't want you to get in that, because they'd lose their jobs of, sweeping up the horse poop. So when the airplane came out, my grandfather-in-law left a stable job at the train company to go work at American Airlines. His parents were horrified. And the trains passed out pamphlets saying if you got on an airplane, you would die because your body would cave in on itself from going too fast. FUD, fear, uncertainty, and doubt. Incumbents want to stay in charge. They don't like being disrupted. So it's logical that you should fear the FUD. Like, I was handed Bitcoin on a silver platter, almost the same day as the Winklevi. They're multi-gazillionaires and I'm not. Why? Because I was too stupid. I was too skeptical and I wouldn't do the work because my clients were like, don't talk about that crazy stuff. Don't talk about magic internet money. Go back and do your job. I wrote one paragraph in the first quarter of 2014. So I got introduced to it in 2013 and I started talking about it and wrote one paragraph in a 40-page letter. My client said, we'll fire you. Now the next paragraph was about Saudi equities, which by all measures, probably more controversial than Bitcoin at this point. Talk about terrorist activity, bad. No one complained about that. They just said, don't do Bitcoin. That was when the price was $500. And so it took me a while to do the work because I was incentivized not to do the work. When your livelihood depends on you not understanding something, you will not understand it. And the last thing I'll encourage everybody is consider the source. When Jamie Dimon says it's a fraud, don't listen to him because Jamie Dimon is the bank. He's the one being disrupted. When Warren Buffett calls it rat poison squared, don't listen to him because 46% of what he owns is banks. When his partner, Charlie Munger, one-ups him and calls it buying Bitcoin is like trading newly harvested dead baby brains. What the fuck, Charlie? Seriously? And who do you trust? Charlie Noyes or Charlie Munger? Charlie Munger has spent 10 freaking minutes on Bitcoin. Charlie Noyes has spent 10,000 hours. He was, that's not possible. He's only 21 years old. That's impossible. Well, let's talk about Charlie. Started coding at 9, okay? He built his first computer at 11. He won a white paper competition in 2000 when he was 14, beating out all the people from MIT on distributed ledger technology. He got a full ride to MIT at 16, went to his dean after one semester and said, can I take a test? This is too easy. And the dean's like, no, you can't take a test. So he quit and he goes to work at Pantera and now he's at Paradigm and he spent way more than 10,000 hours. That Charlie is way more important than Charlie freaking Munger. And that's not to criticize Charlie Munger. Again, he's richer than me, but they missed it and they're gonna miss it because they're the incumbents. and the incumbents will always spread FUD. So always consider the source of what you're hearing and then do the work, like Brian said.
Yeah, and it's not the first time Warren Buffett's missed something either.
Yeah.
I love Warren Buffett. We're a value investor, so we use a lot of Warren Buffett type styles to find value. But they do miss things. Back in 1990, if you look at the Berkshire Hathaway annual report in 1990, their top holdings were companies like Encyclopedia Britannica and ABC, ABC, Cap City ABC, and then the Washington Post and newspaper companies. Those constituted about 40% of the portfolio, right when the internet was getting started. And 3 years later, the Encyclopedia Britannica, and 5 years later, the newspaper companies were worth 90% less because you didn't need those anymore. So, like Mark said, if you look at Berkshire Hathaway today, it's heavily weighted in the banks, which are going to be disrupted by DeFi and blockchain technology. And so they own so many of those that they can't sell them. If they start liquidating their bank portfolio, then everyone's going to front run them. And I find it very, very interesting though. The one bank they do keep adding to is Bank of America. And if you look at Bank of America's patent portfolio, they're one of the largest they have one of the largest patent portfolios of blockchain technology in the world. And so I think that's, how Warren Buffett won't buy gold, but he'll buy a gold miner. I think, he won't buy Bitcoin, but he's loading up on Bank of America stock because they have a huge portfolio of blockchain technology patents.
Brian and Mark, you two are fan favorites. I've seen the comments, but truly the community just couldn't be more grateful for having you two on. And really appreciate it.
Thanks for having us. It's great to be with you guys. I am super grateful for you guys and your efforts to bring the community together, to reach out to us old guys to let us be part of the emerging talent, and really appreciate the time today.
Yeah, I appreciate it too. You guys are doing great work. Keep it up.
Thank you, Brian. Thank you, Mark.
Thanks again, everyone.
All right, take care, guys.
Thank you.
Take care.
Thank you. Well, looks like we got some good book recommendations. Mark, we got to find out what the website you were talking about, lock.net or something like that, but definitely send it over and we can send it to the community.
Lots of great quotes from Mark and Brian that we're going to turn into some social media shares, but excited for this next panel, investing in the metaverse.
Hey, Zachary, Zach, Ryan, Tepe.
Hey guys.
Hey everyone.
Hi.
Hi everyone.
All right. Well, we're excited. Just wrapped up that one panel with Mark and Brian. Those guys are truly
that was awesome. Yeah.
Amazing.
A lot of good tidbits.
Yeah, but the three of you definitely have a lot of experience, and we want to unpack, the investing into the metaverse. I know we talked about NFTs. Now we're going to jump into, the metaverse. So a lot of these NFTs are in metaverses, but yeah, excited to hear from the three of you.
Awesome. So hello everyone, and welcome to the panel on the metaverse. Very excited to kind of be here with Tepe and Ryan to kind of give you guys a little bit of an insight into the metaverse. Ryan and Tepe have led some awesome investment portfolios that are actively targeting the VR and AR space. As myself, I was one of the first to build a company focused on the metaverse alongside my two partners, Jason Cassidy and Michael Gord. But before I get into that, I think, Ryan, why don't we start with you, give a little brief introduction, kind of familiarize everyone with yourself and your background, and then Tepe and I can do the same after that.
Absolutely. Thank you, Zach, for the kind of introduction. So hello, everyone. My name is Ryan. I'm the founding partner of Outpost Capital. We've been investing in the metaverse space since around 2016. So it's been 5 years, a journey of 5 years for us. I think, if we look at the metaverse investment landscape today, most of metaverse investors are coming from, they can have two different backgrounds, right? One type of background is, they might be coming from investing in VR, AR, investing in gaming, and that eventually lead to metaverse investment. And the other type is, really crypto investors who have, invested, different ICOs in the past, probably catch the NFT wave, and through the NFT, that's a lead into the metaverse investing space. So for me, we actually have been investing in both the VR AR side and the crypto side for quite a while, and I think right now is a very interesting time to see these two sectors intersect with each other and creating some new dynamics. And people are talking about how NFT has been helping the metaverse space, getting people understanding the property right in the metaverse, while the metaverse is helping the NFT and the crypto space to develop more use cases and to drive more innovations from that perspective. So I think it's very interesting topic, and thanks for the invitation here, and would love to share a little bit more from my perspective as well.
So Tepe, just really briefly, because Ryan touched on it, I think that it would also be helpful to possibly help define the metaverse for the audience here. And Ryan, feel free to also, and Tepe, provide your own definitions. I think in its most simplistic definition, the metaverse is really an alternate digital reality or realities where people can socialize, work, and play. Today, the way that's represented is, it's accessed through an internet browser. It's represented as a person interacting with it through a digital avatar. But, partial to what Ryan mentioned about AR, VR, and also Tepe, who comes from a background with a strong portfolio of investments there. The near future, and even in the medium term, there's really the expansion of just interacting. Instead of us going to the metaverse, it'll really be accessed virtually in a mix of mixed reality and augmented reality. And the applications within span everything from community to entertainment to ads to economy to information sources. And that's what, hopefully we can talk about the variety today. But I just wanted to that's my personal interpretation, and Tepe, based on your introduction as well, feel free to support or add on there.
Sure. Yeah. Well, thanks for having me at this really exciting panel too. It's really exciting moment for the all the game or VR or blockchain kind of background. All things are coming together into this one single metaverse, one the kind of word. But so it's so just a little bit of background of myself. My name is Tepe, and I'm running this thing called GFR Fund, and this is the so we started investing in this metaverse VR gaming world maybe since 2016. So we Ryan and I invested a bunch of companies together, and so we are an investor in a company called VRChat. This is this I'm wearing this sweatshirt, and there's a big VR community. And we also invest in a company called AAVE. That's a conversion of the universe, the world, the VR, and also music. And we also invest in a company, the gaming company like the Omega Studios or High Rise. It's a MOBA, MMO type of the metaverse on the mobile phone. And we also invest in a company like Axie Infinity, and also a company called Artifact that's combining the game culture and also the this fashion brand culture together into this game metaverse world. So we are really excited about this opportunity in the metaverse. And a lot of people talking about metaverse, and they're not really referring to one single word. So there multiple people have multiple definition of the metaverse, but in my opinion, and my metaverse is more like a digital. I think it's very close to the what the Zach mentioned. It's a digital world of the the real a 3D world. So it's you can be anyone. You can be wear some avatars, or you can be a totally different person. You can be digital copy of yourself, but you can kind of hang out with other friends. Sometimes your families maybe, but more you can kind of express yourself like really freely in a digital world. So that's kind of my metaverse definition so far. But maybe, you know, like a lot of people have like a different opinion. So I love to like talk about that too.
Yeah, something I would add here is that, you know, I have two versions of a metaverse definition here. There's a current version and there's like an ultimate vision version, right? So the current version is very simple. So anything you do digitally, you do that on the metaverse, right? So you might work digitally, you might, you know, play games, having entertainment digitally, you might go to events digitally, or you might even exercise digitally, right? So, you know, the product and services and these kind of platforms that's providing this kind of digital lifestyle, these are all metaverse companies, right? Whatever people do in the digital way, these are all doing that in the metaverse. So this is a current definition of metaverse, but the ultimate definition, I think, is, you know, is a more like an open platform where each of the different world in the metaverse are all interconnected with each other, right? This is more could be more like decentralized and more crypto definition about the metaverse, but I think this is where things are heading towards. Because, you know, currently, if we talk about like, you know, each of the different virtual world where people do particularly function at, the information are not shared, right? The property, the virtual property are not shared across different platforms as well. So we're really talking about almost like a multiverse instead of metaverse as of today, right? Only when we can open up the data layer, the identity layer, we can enable the interoperabilities between different worlds. Can we start to, you know, to have information path through, to have, you know, data synchronization between different virtual platforms, and can we achieve, you know, what we think about, you know, the ultimate vision of the metaverse?
Awesome, thanks, Ryan. And I think you know, Ryan and Tepe, to further supplement your guys' definitions, I'd love to hear from you on what you think, you know, in the present and in the, let's call it 3 to 5 year timeline, what are really the biggest use cases for the metaverse that can kind of give some examples here?
Yeah, I can kind of start. So far, I guess what we are seeing in a metaverse is more like a game kind of related. You got like, you know, Fortnite, you have like Roblox. They also like claim to be the metaverse like by itself. But I think it's more coming to the people's life. So not from like only from gaming world, it's more like, you know, you can do maybe like shopping together, or you can do maybe like just order the foods and the food actually delivered to your house, not the, you know, not like a digital food, but actually like a pizza will be delivered to your house when you buy the things in the metaverse. So I think this in the maybe 3 or 5 years, people like actually spending more time in a metaverse. And maybe there's a school in there. There's more like work in there too. So I think that's like a use case so we can expand it, not only the games, but beyond the games, that's for sure. And also like there's some interesting conversion between those gaming on a VR world with the like, you know, the blockchain. So if those two things combine together, so user can actually own the piece of this like metaverse world too. So they can be actually active like members of the community. It's also by holding some tokens, like a governance tokens of those community, people can actually control like how this like, you know, direction, which direction that this metaverse will like evolve into in the future. And also like, you know, they have some like power to control like I mean, kind of more like a destiny of those like a specific metaverse as well. So I think there are like a much more opportunity just to be on the games, and also like I love to see more use cases in the metaverse too.
Yeah, and I think I believe it was Mark who made a point previously that one of the most interesting parts about the current dynamics of, you know, especially the blockchain ecosystem and cycle and digital assets, our ability to actually invest into the protocols and infrastructure that kind of govern, you know, in this case, the metaverse. So blockchain, you know, and digital assets and cryptocurrency on top of just being able to allow us to transact and interact, you know, within this game environment, or for a shopping experience, or to purchase real estate or NFTs. it does give people the ability to really get involved on the ground floor, start to get integrated, start to get involved in the governance, and it's really exciting, as currently these worlds do exist in a segregated manner, but we will continue to really see the intersection more and more between the games and the virtual realities that we're experiencing.
Definitely. And if we think about it, right, the metaverse revolution here is actually the process of digitization, right? And digitization is a one-way street. I think we can only get more and more digitized starting from here. That means this metaverse revolution is also a one-way street, right? And Zark, you asked about what it's going to look like 3 years or 5 years down the road, and I think Taipei made a great point that the gamers are the pioneers in the metaverse space, right? So even 10 years ago, when gamers playing games in different virtual world in different games, they are already adopting a lot of behavior that have defined what metaverse it is today, right? I think the other point I want to make here is that it's not so hard to imagine what metaverse look like 5 years down the road. And the easy way to understand this is to observe what the Gen Zs are doing right now, right? So currently, for over 80% of Gen Z's time every day, they do their stuff in the digital way, right? So they work digitally, they social with their friends digitally, right? They are spending time on social media, on video games. They have different avatars that they own, right? And they trade cryptocurrency. They collect NFTs, right? All these behaviors are currently in the process of switching from a substream behavior into a mainstream behavior, right? I think basically from this perspective, 3 years or 5 years down the road, it's gonna be a process of this consumer behavior switching from the Gen Z community to the more mainstream community, right? And also, at the same time, with the development of different technologies from the VR AR perspective, from the artificial intelligence perspective, when the blockchain infrastructure is getting more and more robust and secure and support, much faster transactions, whether it's a layer 1 solution or layer 2 solution, when the infrastructure get better, right? So the technology is just the tools to provide these use cases. But from the use case and consumer behavior perspective, what we have for Gen Z today is going to be copied towards the mainstream 3 years or 5 years down the road.
Awesome. And I did want to ask you guys what you thought would be leading to adoption that's faster. I mean, Ryan, you're credited for having one of the first, if not the first, VC fund focused on VR AR, especially out of Silicon Valley. So I mean, before I ask my next question, I'm curious to know what originally got you excited about that technology.
My initial vision around VR AR investment has always been metaverse investment, right? And at that point, VR became a new thing, and Facebook acquired Oculus in March 2014 for $3 billion, right? So at that point, I thought, this is an opportunity for metaverse to become mainstream, because all of a sudden we have a new medium, not only to look into the virtual world through a flat display, but actually be inside the virtual world and be exposed to what's happening in the metaverse, right? So I think at that point, VR AR is the best media, and I still believe so. I still think VR AR is the ultimate media for humans to interact with the metaverse, right? But the reality is, the technology takes time to get adopted, right? And technology has its own cycles. So throughout the past few years, on the technology side, on the hardware side, things are improving and things are making a lot of progress. But still, we are talking about a total consumer behavior changes and a total revolution here. So it's always going to take time. But I think back to the point where I started making VR investment, that has always been investing in the metaverse, investing in the infrastructure, investing in the content, and also investing in the community. So the thesis actually stayed the same. What changed is actually, the label, right? So before, it's like VR AR sounds like the best label to attract all the attractions, but right now Metaverse is a new label, but in the core, it's the same thing.
Yeah, and I think you bring up a great point. Aside from the technology adoption and development cycles, what we're definitely seeing right now, kind of spearheaded by the wave of growth in the gaming sector, which has brought in that kind of Gen Z category in full force, as we saw through Fortnite, is, when the target market is there, the capital will follow. VCs like yourself and additional groups will start to come in. When the capital is focused on any technology, you'll see an inflow of talent. Talent leads to development, which leads to innovation, which does lead to adoption. I remember the first time I interacted with, AR, I used Google Glasses back when they first came out, and I was pretty blown away. But even to see the rapid pace of technology improvement, it really doesn't take, I think for anyone who is intrigued by the metaverse, all it takes is really to interact with something like an Oculus and see the rapid pace of improvement. When I first got mine 2 years ago, compared to even now, when I don't need controllers, there's full hand tracking motion. There's seems to be new updates and functionality on a semi-monthly basis. It really is incredible and not so far off. I've seen a lot of the comments here about Ready Player One. It's not so difficult to imagine a reality where there is a shared virtual world where we all kind of live, breathe, play, interact, and function in our own economy. So it is really exciting.
Yeah.
So,
sorry, go ahead.
I'll go for it, Tepe.
Yeah, sorry. I was going to mention that I think the direction that we all going into. So metaverse is just like a word to describe like what the situation is for the this kind of trap the status of like a world. But I think the Ryan mentioned at the beginning, like words are digitized, like being digitized for the progression into like a digitization is never stops. So like back in 2015, 2016, I think the VR is like the best way to like experience the metaverse because it's immersive and you can actually like be someone else in the world and also talk to or interact with other people. But if there's like more technological advance in the PC side or console, and there's like Fortnite, there's a Roblox where you don't have to really in a VR or AR, you can just be in a computer, like a console, but you can still like be, yourself and also talk to or interact with other people. So I guess like medium wise, I think the VR might be like really the beginning of the metaverse, but I think it's coming to the more more like the outlet for the people to like experience the metaverse. You can be more like a mobile phone might be the one way to do it, like in the future. But right now it's more, PC on console side, but there's some limitation as Zach mentioned that hardware is like really the key right now. And there are some, we need sometimes to just to get the more advanced technology to just experience more like immersive like metaverse world.
Mm-hmm.
Sure.
And
sorry, go for it, Ryan.
Yeah. So, and the other thing I want to mention is that in Taipei just mentioned a lot of things about experiences, right? And if we think about the evolution of the internet so far, 10 years ago, when we go to the internet, we mostly go to the internet for information, right? Information are the building blocks of the internet as of today. But think about how people are using the internet right now. People are mostly using the internet for experiences. When we play video games, we are having an experience. When we are social with each other, when we are talking on Zoom, right, we are having an experience. And when we, exercise on our Peloton, exercise in front of mirror, right, when we join a virtual concert together, that's all experience. So the internet itself is in a transformation from information as a foundation to experience as foundation, right? And also, if you think about what's the best way to consume information? It's basically reading, writing, listening. Those are how you consume information. But how can you experience? How can you, have some new experience in the virtual world, right? And that's through playing video games, having video sessions, and dropping the VR AR world and having a more immersive experience. That's how you can experience something new instead of just acquiring information, right? And back to the original point, I think the other thing I would like to mention is that VR AR are some of the ways for you to experience the internet in very different ways, right? And experience and have a unique experience in the metaverse. So I think, regardless of VR AR, mobile phone, your laptop, tablet, whatever hardware you're using, these are just different medium. But at the end of the day, when we want to be part of the metaverse, we want to have more than just information. We need to have the experience. And I think, and this is where the world is heading towards. And regardless of, VR AR or blockchain, these are all basically solving the problems on how to give people the best tools to start, having these new experiences.
Definitely. And I think, we did have a heavy focus on AR, VR on this call because you both have a lot of expertise. But the metaverse does currently exist. I think it's an extension of the 2D internet. Personally, I have an office in Crypto Valley in Decentraland. You need to just type in a URL and you can physically visit our office. Our company has hosted 3 conferences in the metaverse. So when you talk about experience, that entertainment is really, you have the ability to actually walk around in a virtual environment, especially in today's world where everything is moving to a significantly more virtual. We're here having this conference online as we speak. That enhanced 3D interaction applies to brands. It applies to community. It really augments the entire experience you can see. That'll trickle into concerts, wearables, NFTs will be minted based on these virtual concerts, and we'll just see the increasing, I guess, in the Web 3.0, a lot more of an immersive experience that can still be accessed from really your PC or browser. It's personally very excited and bullish on where this is heading. My company Metaverse Group, which is a subsidiary owned by our investment bank GDA, owns one of the larger portfolios of real estate of metaverse assets in the world between several different locations, and we're really making a bet on the scarcity there. Decentraland is something like the size of Washington in terms of square foot and land availability, but there are individual plots of land that are selling for thousands of dollars. So, the market is growing really rapidly. And I think that when you start to experience these applications, you'll see and benefit off the education and immersion. And just to kind of change subject for a moment, which really was the, a core topic of this panel. Tepe, can you please provide some insight into, I guess, different ways that individuals might be able to invest in the metaverse today? And similarly with Ryan, look at, outside of the VR, AR applications, which might be, only limited to venture investments and blockchain protocols, what individuals might be able to do.
Right. That's a good question. I think there are 2 separate group of assets. One is the equity into those startups working something in a metaverse. So if you believe in Roblox or Fortnite or big company, you can actually buy the Roblox share on the public market. That's publicly traded stock. And if you're looking more excited about the startups, and you can actually invest. You have to be a good investor to be to invest in startups in the US especially, but you can still invest in those companies, and you can even invest in funds that's invest in startups like us or Outpost Capital. So those are like maybe one side of the like total like asset class, and the other side is like NFT, like blockchain and coins and tokens. And NFT like really like varies depending on like what you are excited about. It's like you can be NFT art, it can be like NFT like the gaming asset like XC, Infinity and XC, or you can actually buy those like assets. I mean other like blockchain games as well. And also like a tokens, like XS is like a governance token for Axie Infinity. And also like there are some a bunch of other options to invest in the like more blockchain related the games. Decentraland is also like a public market. Sorry, I think I forgot, I'm kind of keep forgetting like a few other names, but there are like things that you can also invest in a public market. I mean, public market into the tokens. So that's that maybe I could think of out of my head right now, but Orion you can mention like more opportunities.
Yeah, absolutely. Yeah, thank you, Tepe, for the summary. I think it's a great way to invest in Metaverse. And I think Tepe, while you're talking, I have some time to think a little bit deeper on this. And I think the best advice I can give about investing in Metaverse is actually not investing financially, but invest yourself in the Metaverse, right? And how to do that? If you are not a gamer, you can start picking up a game, start asking your kids, what are you playing, and let's play a game together, right? And if you are curious about VR AR, start to get a Oculus Quest 2 or some other VR AR device and start playing around with it. Be inside the virtual world and start playing, hanging out with your friends in VR chat, in different social applications, right? And if you are into crypto, start collecting NFTs and start participating in the communities. And if you are artists, you can even do some NFT drops, right? And you can give to your friends some of the NFT you just created. So I think at the end of the day, this, as we talk about, this is something inevitable, and this is happening right now. So it's a really, really exciting time. And the best way to make the investment here is to transform yourself from an outsider to an insider. Transform yourself from someone who have questions and doubts about what's going on in the Metaverse to a learner to learn about these new things and eventually be a creator so that you can create new possibilities in the Metaverse. And I think that's the best way to invest in the Metaverse.
Amazing. So as a quick summary, because I think we're just out of time here. Tepe brought up some great points about getting exposure into public markets. And this isn't investment advice, but there are, companies like Microsoft, Sony, Unity, and Tencent that have exposure to Epic Games, Roblox, Facebook that, is making a renewed bet into the Metaverse, even NVIDIA, which creates some of the CPUs and GPUs and hardware. Those are all great ways to get, some more formal or look at exposure. And then as Ryan, really well put, the best way to get started is to immerse yourself, start to look at the applications. Buying an Oculus would be my #1 recommendation. It totally changed my outlook on, this future technology, and the rate of adoption. It's still extremely early. It does kind of amaze me sometimes, but I hope everyone appreciated the panel here and got some insights. If you want to learn more about the Metaverse Group and my company, GDA Capital, we do focus on, we're launching the world's first virtual real estate investment trust. So, that's a third way, looking at kind of the scarcity of the real estate assets in the Metaverse, which can be monetized and utilized for festivals, like Atari is getting involved in Festival Land, for gaming and gambling through Casino Land. Those are just, introductory applications. Similarly, I think Ryan and Tepe's information should be in the chats if you guys want to learn more about their funds and connect. Hope you guys learned something today. And thanks, Jeff and Ivan, for having us.
And one last thing I want to confess here is that the last meeting I had with Tepe was actually inside a spaceship in VR chat. And
I got to add you guys on Oculus. I'll get your
we were in VR at that time. So that was so much fun. And I just see someone said in the comment, next time we should do the same conference, but inside the metaverse. So we should plan something around it.
Yeah, we got totally lost in the metaverse actually.
Time to dog food.
Cool.
Awesome.
That's awesome. So thank you so much for your time, Zach. That was awesome. Thank you for hosting it. Ryan, Tepe, thank you for your time and sharing those insights. One of the big takeaways that I saw from session one is, just at a basic level, jumping in, get involved, get into the metaverse. That's the best way to, just learn more about it. Is just do it, like what Mark Yusko said. Awesome. So this wraps up our session one for today. Thank you, gentlemen, for joining and all the attendees. We have a session two starting. So session two will be at 6 p.m. Pacific time. So if you have anybody that you'd like to join, because we'll be airdropping those community tokens, make sure you let them know to register that Zoom link. And that's how they're going to get access. And of course, I shared earlier, we are going to be taking screenshots and snapshots throughout the day. So they'll be eligible for that value drop.
Yeah, just wanted to say what a great first session from CEO Solana, Mark Yusko, Brian Estes, the last panel on the metaverse. And just a reminder again, we use these conferences to really bring together the community. And whether you're investing in crypto, investing in NFTs, launching your own project, we ourselves use these conferences to actually find exciting projects to invest in and to participate in. Kind of recapping our March conference that we launched on NFTs, we ourselves were able to participate in a lot of the projects that were talked about. So just wanted to thank everyone for posting to Twitter, getting other people involved. Again, Crowdcreate, we're excited to launch our own community token, and all of you will be able to participate in the value of this community, in the value of these conferences. Sharing to social media is a big help. You can see that a lot of this is, getting a lot of attention with some of these top thought leaders. Editor-in-chief of Cointelegraph, great panel on the NFT hype explained. So, just a reminder here, go ahead and sign up to our landing page for everybody that would like to get more involved, to have a more formal role in our community. And specifically, we're going to be launching this token. So all the actions today that you're doing to help us build the community is a big help. And we're actually using, a lot of the people on Twitter, we're actively sending messages to have you, take social media roles with our company. And look forward to having more conversations with all of you. We did receive a lot of chats saying that they wish that these panels were longer. The purpose of CryptoCom was to create a one-day jam-packed event with teasers for a lot of these people, and we plan on having more fireside chats with them. We're also putting links to their social media accounts so you can follow them more closely. Ryan Wing, we've known him for the past year, and we've been following him on the Metaverse, VR, and AR for the last year or so. Is a wealth of information. Zach Friedman and Tepe as well. They're very deep in the metaverse, and what they just shared was just a quick snippet. But once you go down the rabbit hole, there's no turning back. So
we have a lot coming up in session two. So on the screen, I'm going to be sharing some of the upcoming speakers. So like I said, make sure to share if you know anybody that wants to participate and to listen in. We have some pretty big. It's so funny because as we're chatting, there's community people shouting out some of these projects. Like we have Star Atlas, Axie Infinity, Yield Guild Games. We have Animoca Brands. We have Upland, Gumi Ventures, QuickSwap, Bittrex, Gemini. It's going to be a packed second half of the day. So super excited, everyone. It was an awesome event. I learned a lot, and thank you for everyone for joining. So you'll be joining session two using the exact same link. So that Zoom link in your calendar event, you just click on that one. The event will be running, and I'll just leave it on this screen.
Cool. What do you think, David? The next event, we need to have it on a ship in the metaverse or in the virtual reality. Got it. plan for that.
I don't know how to do that, but we know the people who have done it. So Ryan Wang, we're going to have to definitely hit you up to see if we can make that happen.
Very cool. And we have Star Atlas that's going to be a speaker in the second panel as well. So learn about their NFT gaming in the future and also another galaxy.
You know, Jeff, I wanted to kind of hit on another point because a lot of people are asking, how do they invest in these projects? And, you know, a lot of these token generation events and even some of the speakers on our event, they are launching, you know, rounds. They're launching their tokens. You know, for example, from our March event, we actually got into, let's say, I think it's Yield Guild Games, Star Atlas, and even today, one of our speakers, Lit Protocol. You know, that's really what our community DAO will be about, where we'll be investing early on these deals. So yeah, it's a great opportunity to listen as a resource, but also to look for investment projects.
Yeah, and something we do want to highlight in this session too, we're actually going to have a virtual networking round for the community and for all of you to meet each other. We also do have a more intimate group that we're going to be starting on Discord where everybody can chat more. But as Ivan mentioned, at our March conference, if you attended, we were actually able to get into some of these early rounds by asking these panelists and speakers, hey, what projects are you most excited about now? And we used that to reach out to the projects, and we were able to get into what's known as Yield Guild Games. They were not a speaker, but the panelists actually said that that was one of their most exciting projects. Now we're a huge fan of what they're doing. Also at their March conference, if you would have listened to Star Atlas, Star Atlas was called one of the hottest NFT projects for 2021. They had their early token sale, and you know, it's just a fantastic project, and you would have been early on there. So a lot of great projects, really interesting people. The best thing you can do is to, you know, participate, do the work, as Mark Yusko and Brian Essie says, and get involved because it is still early. And that's the purpose of our community, to actually support these projects and to get educated, connect, get early access, and we can all build value together with this community.
Well, thank you, everyone. Have lunch if you're in Pacific time, and we'll see you back at 6 p.m. Pacific time. So again, if you have that link that you used to join the first time around, it's going to be that same exact link. And on my screen here, you'll see the upcoming events, so you can mark your calendars. But, you know, final reminder, definitely remind friends or anybody who to join this conference, because we'll be airdropping those community tokens to anyone who's attending.
And Sean also asked a question, is there a place we can get access to the recording? Yes, if you sign up on the webpage for CryptoCom, we will be sending the recordings as well. So if you could refer any of your friends, family members, coworkers, anybody that's interested in crypto, NFT, right? This is a free virtual event for all of you, and we will be sharing the recordings. All they have to do is sign up on the website to be able to get access to the recordings as well. So thank you.
Thank you, everyone. We'll see you soon. All right, take care, everyone. We'll see you back in about 4 hours time.